Good morning, everyone. On behalf of the University of San Diego School of Law and RJS Law, I would like to thank all of you for joining us here today. As a professor in the School of Law and School of Business, it is truly an honor to be able to shape our next generation of future tax professionals. The University of San Diego School of Law Tax Program has always been at the top of nationwide rankings at the schools with tax programs. USD has the best tax program in San Diego, and personally, I believe in all of California. I encourage any tax lawyer to get an LLM, especially from USD, if you are thinking about it. The primary goal of this institute is to bring the entire tax community together to discuss the latest updates with the IRS and any tips and recommendations, to network and to become a tighter tax community where everyone can reach out to one another for guidance. Although this year's event is virtual, this institute is different from most, in that we truly want it to be a gathering of not only tax attorneys, but also CPAs, enrolled agents, tax preparers, IRS and state government officials, and anyone affiliated with accounting or tax. It's very important for the tax community to break bread together with government officials so that we can work together and be less adversarial and more collaborative. You want to get the right result, and knowing each other a little better make things go a lot smoother. We want everyone in the tax or accounting field to find this information useful and applicable to their profession. We've had nothing but overwhelming support for this institute, and we are truly thankful. I would like to sincerely thank Dean Shapiro, co-directors of our tax programs, Miranda Fleischer and Jordan Berry, for making today possible. The USD staff, especially Debbie Ryder, Stacy and Beth, for all of their efforts in putting this great event together. The panelists for volunteering to share their tremendous knowledge with us. Our sponsors, Torrey Pines Bank is our presenting sponsor and CBC Credit Union. And our guests for supporting the University of San Diego School of Law. And last but not least, my wonderful staff for working as hard as you all did to make today happen. We sincerely hope that today's presentations are useful. And I usually say that each one of you can make a few new friends, but that will be next year. We have an action-packed day with remarks from our IRS Commissioner, Chuck Rettig, the presentation of the Richard Carpenter Excellence in Tax Award, which will be given to Nina Olson, and an informative keynote with U.S. Tax Court Judge Liz Copeland. As you all know, today's amazing event is free, but our students and free legal clinics need your help. If everyone attending today just donated $25, we would be able to help so many people with scholarship and legal services for the less fortunate. If you could find it in your heart to donate, we would be forever grateful. With that said, welcome to our annual USD Law, RJS Law Tax Controversy Institute.
There we go. Okay.
I'd like to introduce Tom Woolley from Torrey Pines Bank. Woolway.
Thank you.
Woolway.
That's okay. Thank you, Ronnie. Good morning. This is Tom Woolway. I'm with Torrey Pines Bank, and I'm joined by my colleague, Gail King. And we welcome you today to the USD Tax Controversy Institute. Torrey Pines Bank has been a proud sponsor of this annual event since its inception. We're pleased to be a sponsor of the event again this year. And we certainly are happy to have all of you join us today, albeit virtually. As you know, your clients select a law firm that has the right knowledge and expertise to handle their tax matters. In the same way, your law firm needs a bank with the expertise and customized solutions tailored to meet your needs. Torrey Pines Bank can provide those solutions to your firm. We would very much enjoy the opportunity to talk with you about the services we offer and how we can help your firm grow and succeed. To contact us or for more information, please visit us online at torreypinesbank.com. Thank you again for joining us today. And here's Gail King.
Good morning, everyone. Just a special thanks to USD School of Law and RJS Law. We just really value this longstanding partnership. You've created a great institute and worked very hard to do so. Also want to just give a shout out and thanks to those people that are current clients of the bank. We appreciate your banking relationship. And we hope you all have a great Insitute today. Thank you for letting us be part of it.
Thank you, Gail. Thank you, Tom. You guys were truly instrumental in the creation of this Institute. I'll never forget the first time when I called you. We were a rookie event. We hadn't even started. It was our first annual event. You supported us. You believed in our school, and you helped us with that large $10,000 donation to kickstart this Institute. We wouldn't be as successful as we are if it wasn't for your tremendous support. Torrey Pines Bank is an amazing bank for all lawyers, accountants, CPAs, personalized customer service, great commercial lending. They're just an amazing bank. If you need any help, reach out to Gail or Tom, and they'll make sure they take great care of you.
Thank you very much, Ronnie.
Thank
Thank you,
you.
Ronnie.
Now, our lovely co-chair, Miranda Fleischer.
Hello, thanks to Tom, Gail, and Ronnie. So I am Miranda Perry Fleischer, and I am one of the co-directors of USD's tax program, along with Jordan Berry, whom you'll meet later today. And we are both so excited to welcome you, albeit virtually, to San Diego for this conference and for the chance to bring members of the tax community together for what I think is now the 6th annual Tax Controversy Institute. And it's also the first one at which we get to welcome our new dean, Robert Shapiro. And this is just one of many opportunities we'll have, and we hope to see you at some of the conferences that will be starting to ramp up again this year, such as the Procopio International Tax Institute and the Transfer Pricing Institute later this year. And so conferences like these, the RJS conference is one of the highlights, are just one of the many ways we try to link together our students and the broader community. So to highlight a few other ways, our tax clinics, directed by Richard Carpenter, are now in their 3rd decade of helping hundreds of individuals per year while providing invaluable hands-on training to our students. We continue to offer the Tax Planning Lab, which I believe is about to enter its 7th year, which brings together tax attorneys from Sempra and other firms around the city to conduct simulations for our students, such as negotiating an acquisition or spinoff or joint venture. And the students are assigned different roles and they get really incredible in-depth feedback. So it's been a huge hit with students. It always fills up. And so we're hoping to create a somewhat similar tax deals course in the next couple years to also provide some hands-on experience. And our recent graduates are really putting all of these skills to work, and they continue to succeed in the job market. So we now have almost 1,000 alumni across the country and even around the world. In recent years, our alumni have obtained fantastic full-time job opportunities at each of the Big 4 accounting firms, as well as fantastic law firms such as Procopio, Allen Matkins, of course, RJS, and elsewhere, ranging from Florida to even Rio de Janeiro. We're welcoming a new crop of students to campus next month, including, I believe, Ronnie's nephew. We have students coming from as far away as New Orleans and Idaho, and we're confident that they will enjoy similar success and help maintain such a vibrant tax community. And in fact, some of them already have jobs lined up at places like Big 4 firms or Snell and Wilmer. One of the other initiatives that we were just about to create before things went sideways 18 months ago is creating a mentorship program for our tax LLM students, which would match them up with members of the local tax bar. So you might be getting a call or an email from some of us about that. We also hope to see you at our tax law speaker series throughout the year, which brings in prominent law professors from around the country. So if those of you who are local, you could take a break from your workday, come enjoy lunch and a talk about tax policy. We'll be sending out the schedule shortly. And we'll be partnering with some of the other centers at the law school this year to do a talk on tax and health law or tax and religion. So we're gonna make it a little interdisciplinary this year, which should be fun. So I say that these are the program's highlights, but these are really your highlights. We couldn't do it without all of you who teach our students, mentor our students, hire our students, attend our programs, and so on. And of course, a big thanks to Ronnie for all he's done to strengthen the tax program here at USD, teaching, serving on our board, hosting events, organizing this conference. And I'm sure we'll have a great time today, but I do look forward to seeing you all in person next year. And we will, for those of you that have been watching the chat, be more than happy to provide numerous canapes next year when we're all back in person, so you don't have to bring your own like this year. So thank you and enjoy your day.
Thank you, Miranda. That was beautiful. And now it's an honor for me to introduce our opening keynote speaker, James Lee from IRS Criminal Investigations. He is the chief of IRS Criminal Investigations. We have been so blessed as an institute since its inception. Don Fort, his predecessor, would come each and every year to do opening remarks, speak for 15 to 20 minutes, telling us the latest and greatest of what the IRS CI is doing. And we are truly honored to have you here today. James Lee is the chief. In his position, he oversees a worldwide staff of approximately 3,200 employees, including 2,100 special agents in 21 field offices and 11 foreign countries. He leads and oversees some of the most significant investigations of financial crimes involving tax, money laundering, public corruption, cyber, identity theft, narcotics, terror financing. They're around everywhere. When you need help, when all the agents, like just the FBI, DEA need some help to take down criminals, IRS CI is right by their side. So it's with big honor that I introduce Jim Lee from the IRS.
Hey, good morning, and thank you, sir, for the introduction. Appreciate the invite to speak today. I'm always excited to get a chance to talk about IRS CI, a place where I've spent my entire adult career. 15 minutes is quick, so I'm going to try to get out some really good information here before the clock buzzes. And, Miranda, I think you and I were looking at the same chat post from Mr. John Bogren about the canopies and meeting in person, because I too want to get in front of everybody sometime here in the near future. So let me start out real quick for those that might not be as familiar with IRS criminal investigation. So our mission is simply to investigate criminal tax violations, okay, and other related financial crimes, as mentioned in the introduction, namely in that money laundering, bank secrecy, terrorist financing, financial areas. Spent a significant amount of time in all of them. But my highest priority as the chief is our country's tax law. So therefore, this tax mission focus is my top priority, hence the division's top priority. And I'm really happy, about the emphasis and the focus in this area over the past several years. And it really makes sense for us because nobody else can do this work. And I'm talking about recommending Title 26 criminal tax violations. And this is how we articulate our relevance within the service. This is how I articulate why I need funding and more resources. And I say that it dovetails right into why CI plays a significant deterrent role within the service. And that deterrent role is that people need to know that there's a consequence for being willfully non-compliant. And the consequence is jail time, which is far different, than paying a fine, a civil fine. So now a couple other interesting things, I mentioned we're the only US law enforcement agency, federal law enforcement agency to be able to recommend tax violations. And we're the only federal law enforcement agency that dedicates 100% of our time to financial investigations in general. Therefore, I really see us as protecting the integrity of the entire financial system, makes us unique. We work very closely with the Department of Justice, specifically DOJ Tax and the U.S. Attorney's Office, because we recommend our cases to them for prosecution. They prosecute them. So again, we work a broad range of criminal statutes, and tax, employment tax, international tax, refund fraud. There's a lot of program areas in the tax, cryptocurrency and virtual currency, pure money laundering, narcotics, terrorism, public corruption. The list goes on. Broad range of program areas in the financial investigation world. So from a business perspective, about 75% of my time, the division's time, is tax or related to tax directly. Another 12% narcotics, another 12% other, money laundering, terrorist financing, etc. You know, in the opening 21 field office, that's right. We're led by special agents in charge in each one of those areas. 11 foreign posts. I got about 20 individuals located overseas, you know, which helps our international partnering. And, you know, it's a moving target, but something else that's unique that may be lost on some. We only make up about 2.5 to 4% of the service. You know, depending on what the temporary employees and that with the service, somewhere between 70 and 80,000 people. It's only about 2.5%. So agents train about 6 months down at our federal law enforcement training center. First 3 months is just like a police academy, just like you would expect. Second 3 months is very specific to our mission. And the last thing, kind of before I move on to maybe my first kind of speed topic, is our conviction rate remains the highest, amongst the highest in federal law enforcement. And, you know, I bring that up to simply suggest that if IRS CI, if a special agent is investigating somebody, there's a really good chance that they're going to jail. About 92% historically, and about 94 to 95% when it's just tax. So let me move quickly into an area about COVID. And I want to talk here just for a minute about what we're doing in the COVID fraud related area, because I get this question a lot. And and although most of what we're doing right now is non-tax, it's kind of hard to avoid this topic given the past year or so. Well, it means our financial investigation. So we're involved in all forms of COVID fraud. Okay, since the beginning, fraudulent PPP loans have really dominated this space. But we're involved in all these different COVID-related fraud areas. And, I'm talking about PPP, the EIDL, the Economic Injury Disaster Loan, the Economic Impact Payment. People are stealing, identification or counterfeiting checks. PPE, where people are counterfeiting equipment, 7,200 claims, states unemployment claims. So we've got numerous investigations going on in this program area. And over the past, 5 months or so, there's not a week that goes by where I don't see somebody being indicted in this area. As I mentioned, the majority is still money laundering, but tax charges are present. And just to give you a little bit of scale, this fiscal year, through the third quarter, we've initiated about 334 cases, about 500 total investigations since the beginning, and about 171 cases we've indicted this year, about more than 200 since the beginning. So another interesting fact to just show the scale and the significance of our investigation, we've had right in the range of 20 cases sentenced thus far, and we're averaging about 3 years, just again, demonstrating our impact, in this area. My national DIT is still about 7% of my division's time is COVID right now. And that's manageable because when I built the plans for this year, I was around 5%, so very manageable. I'm just continuing to stress the most significant COVID-related cases, and more importantly, the timely prosecution of these cases. It's critical to have this deterrent impact out there for those that think they're going to get into this and steal money from hardworking, American tax-paying citizens. So let me try to quickly move into some successes that I see. I got a lot. I can't go over every one, but I want to pick out a few. I picked out a few here, to kind of highlight really kind of some of the scope that we're working on. Everybody on this call, or most everybody's probably heard about these syndicated conservation easements. And we had 2 return preparers plead guilty earlier this fiscal year to client conspiracy violations in regards to these conservation easement cases. Those were the first real legal actions from a criminal investigation standpoint. These 2 I'm talking about, the Ajee brothers, from 2013 through December of 19, they essentially pled to conspire with others to create, promote, and market, these fraudulent syndicated conservation easement tax shelters. So and then after they use their position as return preparers to prepare, assist, in the preparation of false returns, and that false item being that charitable contribution. So again, that's what, essentially the promotion part of the conspiracy. Another case kind of showing the breadth of what we're doing. You've got the Robert Brockman matter. This was a Houston billionaire and CEO of like a software company, charged with essentially, taking about $2 billion through a scheme to evade taxes, hide assets, launder money. Biggest tax case of its kind, especially when you talk to these prosecutors. And this was tied to another American billionaire, Robert Smith, who agreed to cooperate with prosecutors. He wasn't charged, but did agree to cooperate and then pay back about $140 million in back taxes. And then, as I've mentioned, the opening mentioned, our terrorist financing arena. This fiscal year, I was able to announce that CI, my division, was able to disrupt 3 known terrorist organizations, their efforts to raise money on the web. The investigation, to be a little more specific about it, it revolved around cryptocurrency fundraising, where Hamas, Al Qaeda, and ISIS, names and groups that we've all heard of, where they were obtaining cryptocurrency, with the intent to carry out criminal acts. One of those groups even advertised that its Bitcoin donations were untraceable and would be used for militant activities. So my division shut that down. And in fact, that was the largest crypto seizure in the history of terrorist organizations, crypto accounts. So this year I also was able, again, another little deviation, still in that crypto world, but kind of the drug world. I announced our division's work on $1 billion with a B dollar seizure. Some of you may remember this. About 7 years ago, Rolf Albright was arrested in like a science fiction section of the San Francisco Library and charged with running a dark web drug marketplace known as Silk Road. At the time of his arrest, only a portion of the proceeds of all that, was recovered. But what we've been able to do since then is uncover $1 billion of that Silk Road's illicit gain, which ended up being stolen by a hacker. And what happened? The person successfully hacked Silk Road, sometime during its operation before we shut it down, essentially stealing that drug money, what it primarily was, from the dark web sites, Bitcoin addresses. And it was about 69,000 Bitcoins, now worth well more than $1 billion. And we all know how that fluctuates. But these cases were huge. And I didn't even mention the Twitter hack, the John McAfee matter, our first ever crypto case, which involved a Microsoft employee, and the list goes on. So very, very happy about the work that we're doing in this area. And I'm looking at the clock. I got a minute, but I got about 3 minutes of time here of content. So hopefully your sponsors will give it to me here. But the outlook for 2022 and beyond. And my hiring efforts have never looked better. We're trying to hire about 240 agents this fiscal year, and on pace for about 280 non-1811 ranks. This is everybody else that does the behind the scenes work. Great news right now is our admin support and our field investigative analysts are near 100%, and that's unheard of for me. 22 and beyond, that was 21. 22 and beyond, hiring looks just as good. And our commissioner, that's a direct result of our commissioner being so supportive of us. And I think just anybody out there listening, we have like a special 2-week announcement out there that I believe ends tonight. So get on there after this and put the word out if people don't know. Budget real quick. A lot of talk about budget. We all watch the news. If you've been following it, you see it. It looks good. I'm very optimistic. Let's assume that we get a budget increase. And, my expectation is some of that's going to flow to my division. And my priorities with the budget really revolve around hiring, which, I just mentioned. I got to be able to backfill and replace attrition. But another significant area is this continued, which I stress, continued investment in cyber data and technology. So think of things like cyber tools and resources and crypto tracing tools, contracting services, in addition to data analytics and data ingestion to help us manipulate, all this data that we have that just makes us more efficient. So I think continued investments for years to come there to keep pace with these criminals in the cyber world is necessary, and that's what I intend to do. And I believe what I'll try to end on here in summary is partnerships. Got a lot of public-private partnerships. One that I want to kind of focus on is our Joint Chiefs of Global Tax Enforcement. We call it the J5. And, we've got a new LinkedIn website out there for that. That was really born as a result of an OECD, an Organization for Economic Cooperation and Development, meeting for countries to do more to combat international tax fraud. So criminal heads, my counterparts in Australia, Canada, Netherlands, and UK, like-minded tax authorities, it just expressed a desire to do more. Hence, the J5 was formed. And one of the unique approaches, there's many, but one that I love talking about, we refer to this as the challenge. And we recently just completed like the third chapter of this challenge. And where we focused, the countries focused on cryptocurrency and the fintech industry. And it's a great concept. The value cannot be overstated because during the challenge we get experts from each country with varying technical skill sets, and then we gather. I essentially lock them in a room and tell them to produce results with real data. So at the end of the day, that's exactly what they do. They've done it. This is the third time. They've done it every time. And at the end of the day, every country walks away with new, real investigative leads. And again, the work being done there makes the world much smaller for criminals. And I'm very confident in saying that there are operational leads that we have ongoing right now in the US that we're actively working that we would not have had without that partnership. So I'm about 3 minutes over. I've got about 3 hours worth of topics, but I do appreciate the time and look forward to getting in front of you personally the next time. Thank you.
That was great. Before you end, give the audience, what are the top 5 things your agency is going to be going after? I know you're going after non-filers. What else should we all be worried about here?
Well, high income, global wealth in every category, I'm interested in. Abusive tax shelters, I'm interested in. Employment tax cases, I'm interested in. All things international, as I just kind of ended on, I'm incredibly interested in. And in fact, you're probably going to, I know for a fact, you're going to be talking to a counterpart of mine over in SBSE, specifically in the Office of Fraud Enforcement. And again, there's a bunch of initiatives in there, that we're tied at the hip, so to say. And when you listen to every initiative he's working on, and I'm talking about Damon Rowe, who you're going to talk to probably in a panel today or later. I'm interested in all those initiatives. Again, I've got a broad tax program area, and that's my relevance. Remember, that's what I need. That's what we make our living on to create that deterrent effect. So I'm very interested in those 4 that I mentioned, and he'll give you probably 6 more. I'm interested in all of them, and I'm interested in quality fraud referrals and enforcement leads in all these tax program areas.
Wonderful. Thank you so much, Jim.
Okay. Thank you, sir.
And now we'll run into our first panel.
Ronnie, can I begin? Should I begin?
Yeah, go ahead, Frank.
Okay. And thank you, USD. Thank you, Ronnie, for inviting me to moderate on this panel. I'm going to try to. So what we're going to cover today is representing clients before the collection division. So our panel is in alphabetical order. The law, Joseph F. Boyles, was a former revenue agent. He's had his own office doing IRS controversy over 20 years. Can everyone hear me?
Yes.
For over 20 years, and is in the trenches with all of us doing this type of work. Then Richard Carpenter, IRS tax disputes, right? That tells you his website says it all. But he's also an adjunct at the Federal Tax Clinic at USD, where you see the cases that are being brought and the problems and challenges of our taxpayers, especially the low-income taxpayers. And then finally, my friend, who is now the Commissioner for Collection and Operations Support in the Small Business Self-Employed Division. He sent an email this morning and said he had to talk to his bosses about something. I'm saying, the commissioner has a boss? How does that happen? But again, Darren has, from what I've seen and over the years, I think he's done every job in the collection division of the Internal Revenue Service, starting from the revenue officer on the street and all the way up to being the commissioner. So if there's something about IRS collection and policies, there's nobody else that knows it. So that's what we're going to try to do. I'm going to summarize what we're going to go over. We have a very aggressive agenda. Some of it may be a little bit duplicative of what you've heard in terms of what CI is working on, but that's intentional. One of the things and one of the issues that permeates all tax controversy today is that they're no longer myopic. Each function is concerned with the whole picture. So the collection division traditionally is only worried about collecting an assessment. Now they work with the other parts of the Internal Revenue Service, so they don't have blinders on. So when we talk about high income taxpayers, that could end up in a referral to the Criminal Investigation Division. Crypto, that is also something that the collection division is interested in. So what we're going to go over. So take that, when you look at the topics that we chose for today, keep that in mind. So the first topic we're going to go over is collection during COVID, right? The IRS has been remarkable during COVID. If you see the EIP payments that went out virtually seamlessly. Today, we started seeing the advanced child tax credit that are going to go on monthly, seriously. And millions of people are getting money directly deposited into their bank accounts. One, I think it's remarkable, and it shows that the IRS is a public service conscious agency. But two, for those of you complaining that some of your refund checks didn't get out or returns aren't being reviewed at the service center, they know it. They're there. They're living it. At the same time, Congress said, you've got to get this money to the people who need it the most. Let's get these EIP checks out. Let's get this ACTC, Advanced Child Tax Credit payment out. And there's money coming for you to hire more people. So when you think about COVID and what the IRS has to put up with and what our challenges are, take into account everything they have done during this difficult time. Then we're going to talk about artificial intelligence and big data. I never thought it would come to the collection division, but it's there, and it's permeating the decisions that they make. Then high income non-filers have always been a pet peeve of mine, Like, how did they get away with having all this money and not filing? Why aren't they all in jail? Trust fund recovery penalty. Hey, government didn't give you enough during COVID. We got difficulties. Let's just borrow the trust fund money. Cryptocurrency and IRS collection. And we can summarize it really quickly. It's the Blondie song. One way or another, they're gonna get you. And then finally, hey, revenue officers collection has gone international. You can't even move it outside the IRS. You could, first you tried to hide it in Swiss accounts. Now you're trying to move it in foreign assets. That's not working anymore either. So there's some fun in this because, you know, I marvel at the lengths that some of our wealthier clients will go to not to pay tax. But then I get really upset about it as well during times like COVID, where, you know, we all have to do our part and we all have to do what it takes to show that we're in it together. All right, so the next, is someone controlling the slides, or do you want to give me control of the slides on my screen? I guess, all right, so let's go with, so if somebody's got the slides, let's go with dealing with the collection division during COVID. And Darren, do you want to lead us off, and do you want to say a few words first?
Thank you, Frank, and thank you everyone for inviting me to join you today to help get our messages out. I mean, we have our own communications function. We do our best to get our messages out, but I have to say that in the 3 decades I've worked here, some of the best ways we can get the message out, especially now, is to the practitioner community, because most of the taxpayers, at least that I deal with, are represented. So you're one of our best ambassadors, so thank you. I did want to start, since we're talking about dealing with the IRS during COVID. If we could go to the 5th slide, and could someone just verify for me that my microphone's turned up loud enough? Can y'all hear me okay?
I can hear you.
Hey, thank you. I just want to start with this statement. You know, we've lost colleagues and loved ones here at this agency. I know most of you on this call know someone. If you haven't been immediately impacted, know someone well who's been impacted. We're part of the community too. IRS obviously is not immune from this. We've had people die that work here as well. And this has been a long slug. The main message is we're part of your community. In the 1950s, when the Bureau changed its name to the Internal Revenue Service, and it did so for a number of reasons, but importantly, to emphasize we're here to serve the American people. And what we do transcends the tax code. It funds the coffers of nearly every function of our government that also serves the people. And the pandemic has been awful. It's a once in a century type event, and we've all endured it together, but it gave the IRS a moment to serve the public in ways we never thought that we would have to. And that was the commissioner's challenge to us. How far can we go to help America get through this crisis? And so some of the things that we did to meet the commissioner's challenge, I'm going to speak about. As you see, the first item is we want to do everything we can under existing rules for immediate broad relief for people who owe money to the IRS, especially if it's resulting from the pandemic, from the COVID virus. And this includes people who are affected by mail processing and correspondence delays. Good news is, as the commissioner pointed out recently, our mail backlog is caught up. We do not have a mail backlog. We are current answering mail. I can tell you for collection that we are caught up with taxpayers sending us returns and checks and things like that. Are we still working on paperwork necessary to input agreements and things like that? Well, yes, as we have been getting people gradually back in the office to deal with that paper, it's not as fast as we want it to be, but it's getting better every day. Secondly, we want to remove bureaucratic barriers. and expand the flexibilities, being a little bit more tolerant to taxpayers whose financial condition has been affected by COVID-19. I'm going to give you some really practical and some far-reaching risky initiatives we took at the IRS specifically to address those. And we also want to balance that relief that we provided. So what I mean by that is we want to help people, but as you just heard Jim Lee speak about, there are people dastardly enough to do awful things right now. So in collection, we've been working with the Office of Fraud Enforcement to try and examination too, to try and catch and stop COVID type fraud. We stopped hundreds of millions of dollars, over $100 million in payments that shouldn't have gone out in the way of credits. So we're doing that. We've had employees who have gone out and taken significant enforcement action on really egregious taxpayers who wanted to test us during this period. And at the same time, we want to make sure that we're much more flexible in penalty relief, giving people extra time to make up payments and things of that nature. So if we could move on to the next slide. So it was called the People First Initiative, and with the evacuation order, just after March, started on April the 1st, and it ran through July 15th. We put some sweeping initiatives in place to help taxpayer. We pretty much stopped all of our automated lien and levy operations, and we made sure that any of our enforcement activities that were happening in the field were absolutely necessary and often had higher levels of approval. Why did we stop issuing final notices of intent to levy at that time? This is really important. I mean, I talked about serving the people and the commissioner asking us to really think out of the box and go as far as we can to help people. You know, if a revenue officer issues a notice of levy and you've got a credit, an economic impact payment credit that's sitting in your bank account, you can pick up the phone and you can speak with that employee and make that clear to them and show them those were the funds in the checking account, and we can get you a levy release. In fact, we had procedures in place to make sure that very thing happened. But when you're talking about hundreds of thousands or millions of notices going out, final notice of intent to levy, and if you don't respond within a certain amount of time, an automated system will automatically trigger a lien to be filed, will trigger a levy to be issued on your checking account. We knew going into the pandemic, we were resource constrained. We wish we had someone who could answer every single inbound phone call. The last thing you want when you get a letter in the mail that says IRS on it and it invites you to call a toll-free number is that you're on hold for a very long time or you can't get anyone to answer that call. And while we did a lot of things to improve level of service, we were not answering every call, and we were not going to be in a position where significant numbers of levies were hitting taxpayers' checking accounts, and some of them undoubtedly were going to attach to an economic impact payment, a credit that someone needs to keep a roof over their head, to put food on the table. They're out of work, they're partially employed. The last thing we need to do at the IRS is make their lives even harder. And so that's why we stopped those automated programs, the levies, the liens, the final notices at that time. So I just wanted to make sure that we shared with you that was a very deliberate and conscious effort on our part. And we believe it has helped hundreds of thousands of people, if not millions. Go to the next slide. I'll talk a little bit about installment agreements. During that time period between April and July, we also didn't default installment agreements because a taxpayer wasn't able to meet the terms of their installment agreement or make a payment. If you're working for a restaurant, the darn thing got closed because of health safety rules in your state, and you didn't have a job, you're not going to have the money to make your monthly payment. And that goes to our mission about being fair at the IRS. Is it fair for us to take enforcement or default an agreement because if through no fault of your own, you can't make your payments? And so that was something that we did during the pandemic. We also, during the same time it was already in process, we redesigned our collection notices to make them more understandable. And we did something that started last October, October the 1st, actually, we added quick response or QR codes, what some people call generically barcodes, to our notices. Now, we started down this road because we were concerned that many taxpayers were calling us who could solve their own problem. They didn't need to talk to the IRS. They didn't need to have a financial interview with us. They didn't need to risk enforcement or a lien being filed. They could pay their taxes within 72 months and they owed less than $52,000, millions. Nearly 3 million taxpayers a year on average before the pandemic meet that category. And yet they get on the phone and we're with them for 17 to 21 minutes on average, my math with a stopwatch. And I think it's pretty good range to get a financial statement to set them up on a payment plan. If they just took their smartphone and scanned it over that QR code and it brought them right to irs.gov, deep into the website, right at the payments options landing page, they might decide I'm going to give myself an installment agreement. No lien, no financial statement, their bank account doesn't get levied. They get confirmation from us that they have an installment agreement, their problem solved. So we added that on October 1st to make it easier for people to get installment agreements. And we actually saw an increase in taxpayers going to that website because of that QR code during the pandemic. If we could go on to the next slide. I talked a little bit about the automated liens and levies a moment ago. So they were suspended during that period and they have been suspended until just about a month ago. So we resumed the automated lien and levy notices, okay? Doesn't mean a lien or a levy is going to happen. I want to really stress that. But we turned on again with the final notices asking you to please pay us. And our hope is every single taxpayer who gets one of these notices will respond favorably and they'll provide us information to show they can't pay their hardship, they'll pay everything they owe, or they'll set up a payment arrangement with us or some other opportunity they have. But if they don't respond favorably to this notice sometime in the next month or so, then they will be at the receiving end of an automated levy on a checking account or a lien being filed. I want to be clear though, we resumed this activity on June the 15th because we waited until we were reasonably sure we were not going to be impacting economic impact payment credits, COVID relief credits in someone's checking account. That said, as Frank just pointed out, we just started the child tax credits, I believe yesterday, going out to taxpayers. So we, as a policy, will not be attaching those funds. So we have put in place safeguards to make sure that even though we've turned these automated programs on, that we will not levy any of the child tax credits. Next slide. Passport certifications. They were suspended during the People First Initiative. For those who aren't familiar with it, the FAST Act, Fixing America's Surface Transportation Act, requires the denial and authorizes the revocation or limitation of passports certified to the Secretary of State as having a seriously delinquent tax liability. If any of you are taking notes and following code sections, that's 7345, 7345. Now, I really want to stress, it's the State Department that has the authority here. Our job at the IRS is to compile that list and to certify to the Secretary of the State individuals who have a seriously delinquent tax debt. How much is that? Well, we adjust it for inflation annually, and it's currently $54,000. So we also make sure that these taxpayers aren't still in a phase where they could have collection due process rights before the independent IRS Office of Appeals. So we make sure that cases that are certified to the Secretary of State have already had a lien filed and they've had their due process rights, their administrative appeal rights at IRS, or those rights have expired, or that a levy CDP right has also expired. That just resumed those passport, the certifications of seriously delinquent tax liabilities. We just resumed those certifications to the Department of State on March the 14th of this year. And here's some very recent news. the revocation recommendations. So we don't tell the State Department revoke a passport. We can't revoke a passport, but where taxpayer behavior, and we'll talk about it a little bit later in this segment, under certain circumstances, the taxpayer's behavior is so egregious, a revocation could happen. And we can recommend to the State Department, request that they revoke a passport. We ceased sending those until yesterday, July the 15th, we resumed that activity. And next slide, please.
Darren, do you know if the State Department is in fact revoking passports?
It's a great question, Joseph. I don't know with certainty. You know, it's up to them. I mean, they run their department and they've got resource issues just like we do. So they are aware that we're sending them. Okay. You know, whether or not they'll act on them and at what pace, I don't know.
No, I've been working with the Philadelphia office of the IRS that handles the issues, the 508Cs and the 508Rs, and they've told me anecdotal stories of taxpayers calling in from abroad who are stranded and can't fly to any other country other than back home to America. But I haven't had that happen to any of my clients, so I don't you know, are these urban legends? Is that really happening, or do you know?
You know.
So
literally within a couple of hours of us coming on air for this event, I am the Commissioner of Small Business Self-Employed. I'm the official who gets the certification and the decertification list. So they come by me for approval, and I'm not aware of anyone who's stranded.
Okay.
So what I've seen so far is, one, they're not renewing passports, right? Which is
That's happening to my clients. They're not getting renewed. I haven't had anyone get revoked.
Across the board, the renewals. Two, they are giving you 90 days from the time they get the letter from the IRS to work it out. Now, even during COVID, 90 days means 90 days. It does not mean 91 days when you're dealing with the Department of State. They are resource challenged. It is 90 days. So if your passport was revoked during this 90 day, the same way they're revoking the passports if you're behind on your child support in New York, you will need to reapply for a new passport. So it's not just a process of, oh, the IRS has decertified my debt. My passport is now good. If you sit on this for more than 90 days, and during that time, your passport has been revoked, then you will have to go through the reapplication for a brand new passport. So the thing that Darren said that is incredibly important, when you're working with the Department of State, move quickly. Get your case handled at the IRS, get the decertification, make sure that if you are in that status where they haven't revoked yet, you get that to the people that you are working with at the State Department. At the same time, if you've got your humanitarian defense, right, that the IRS hasn't considered through their expedited process, but you're working with someone at state, address your humanitarian reasons for traveling. All right.
Frank, if I could add a little bit of additional context, just so that our viewing audience can understand who these taxpayers are. So when we look at the period of time since we've had this program, just generally speaking, historically, these are accounts that have been in our collection process. They've gotten notices, opportunities to work with us, et cetera. They've been in process for over 5 years. And the amount of tax that they owe on average exceeds $200,000 each in tax. So these taxpayers have had an opportunity to work with us to not be certified to the Secretary of State for several years. So I just want to make sure everyone knows who we're talking about here.
Did you want to continue?
Yeah, if I could see the next slide. Sure, private debt collection. We suspended private debt collection, sending new cases to the private collection agencies during that period of time as well. But we did resume that activity on August the 24th of last year, 2020. And this is really important. This program continues to collect significant revenue above and beyond the cost of the program. And it's enabling us to reach a large number of inactive receivables that there's a pretty good chance the IRS may not have ever been able to work. And this helps to reduce the tax gap. And it increases fairness in the tax system. Whether you're a high income taxpayer or you're barely getting by, paying taxes isn't comfortable for most people. And when you go through the process of filing and finding the money to pay your taxes, you expect that the IRS is holding people accountable who don't pay their taxes. So if someone's case, for whatever reason, IRS doesn't have a brick and mortar close by, it's a lower risk case that it may not get assigned. Should they not be pursued by the IRS or pursued to pay those taxes at all because of a resource constraint, potentially, right? So that's one of the things that this private debt collection program does. And as importantly, because many taxpayers are seeking a payment plan. Well, you can get a payment arrangement with a private collection agency with no fee paid, no lien filed. And you don't have to provide a financial interview or any of your confidential financial information. And there's no threat at all of enforcement because they have no enforcement authority. Frankly, if you're working with a private collector, it's a great deal. Take advantage of it and set up a payment arrangement.
I would also say that as people come, the quick thing on why I think they're great for voluntary compliance. Many of our clients are afraid they don't want to do anything until they get that letter from the IRS. Then that letter, even though it's a private debt collection, makes them go to a professional and then get into compliance. So that soft touch will bring some people back to compliance. Ignoring them and only sending the annual letter just lets them have that false sense of security that they never need to deal with it. So if they ever ask, like, why are we doing this private debt collection? Because it fosters voluntary compliance.
Yeah. Hey, thanks. And Frank, I think we got a question already from the Wall Street Journal. It was just passed on to me. They're asking, how do taxpayers know if the person knocking on their door or calling them is really from the IRS? I can tell you, if the person knocking on your door, they work with me, right? They're going to have a pair of credentials that look just like mine. It's got a hologram. It'll have their picture. They'll also have an IRS smart card. I'd have to leave the broadcast because I'm using my computer. If I pulled it out, you'd lose me, but someone else here just let me borrow theirs. So they have two forms of ID and you can ask to see them. If they don't want to show you a form of ID, don't talk to them. They're not the IRS. They'll also provide you, if you're further skeptical, with a toll-free number to verify their identity. And the police, local police and FBI, everyone has a number they can call through the Treasury Department to verify every one of our field-going employees, collection and examination. As far as the phone, listen, if someone calls you, I get emails every week threatening to put me in jail for not paying my taxes and things like that. So I know it's a big problem. But typically speaking, you've gotten a notice from us. You know we're going to call or knock at your door. It's not a surprise. So I hope that answers your question.
Darren, how long does a case normally stay with a private collection agency?
I don't know. They're not the normal life cycle of the cases we have in the field. I'm pretty certain of that.
Are there any certain dollar ranges that if it exceeds that, it does not go to a private collection agency?
Don't have that available. Typically, these are lower risk cases that we've got cases ranked in order of high risk, medium risk, and low risk. So now you're talking about lower risk cases that were not able to even work in our campus operations or through the notice stream. So they're residing in our queue, our holding area, and they're not being worked by our campus employees or our field employees. And the dollar ranges vary, but they don't rise to a level, and I'll talk about analytics in a moment, but they don't rise to a level that they seem to be a high enough risk for being collected. So these are taxpayers who our analytics tell us whatever the range is that they owe, that they're going to make the payment. And I'm also verifying that low income taxpayers. So I know the advocate's concerned about that. So taxpayers with low incomes that we're concerned about a hardship and they couldn't pay anyway, we know we do screen those cases. So cases that we believe would be a hardship, a CNC, et cetera. So to some extent, the dollar ranges are involved in the analytics there.
Thank you.
The next slide is with reasonable cause.
Oh, thank you. So some of the other initiatives that we're taking, so penalty relief. So reasonable cause simply means that you exercise ordinary care and prudence, and despite your best efforts, you weren't able to file on time, you weren't able to pay on time. The typical penalty you see is late payment or late filing penalties, which is really unfortunate. As you'll hear when the group talks about the non-filer initiatives, I mean, most people don't file because they can't pay and they don't realize they're going to owe more when they wait. But if they couldn't file or pay because of something beyond their control, and look, it could be COVID related. Let's face it, if you're in a hospital on a ventilator, you're not preparing your tax return. So if we get documentation that shows, and there are several, COVID's not there are lots of different reasons you can have, but generally speaking, if it's beyond your control to meet your tax obligations, and you exercise ordinary care and prudence, you have reasonable cause to have those penalties abated. However, by policy, the IRS has a first-time abatement procedure where you can have that. You don't have to tell us about reasonable cause. You don't have to establish that you exercise ordinary care and prudence, et cetera. If it's the first time that you've had this penalty, then you will automatically get the abatement. And we've been using that extensively to help people during COVID. A second item you see here, this is extraordinary, and we really want to point this out. During the pandemic, and this is something we did to help during the pandemic, if you owe up to $250,000 and it's just for tax year 2019, right? It's the only liability you're going to have. There's a good chance you're going to pay. If we set you up on a payment agreement, you're not going to owe again in the future. You're going to pay that agreement on time. We will not file a notice of federal tax lien. So the government's at risk as a perfected creditor by not filing that lien. I've been here for 34 years. Never thought I would see that. But as I mentioned at the beginning, Commissioner's challenge to us was live up to that word in your job, in your agency title, Internal Revenue Service. How do we better serve the American people during a once in a century tragedy? And so this was one of the things we did to help people not have to go through intrusive financial investigations. How are we going to investigate them when people are wearing masks and we're not knocking on doors, meeting with people? And do you really want to do that during this time? Let's trust these people. If they say they're going to pay us back, let's trust them and not file a lien. Another one we did was we extended the short-term payment agreements, which used to be 120 days. They were 180 days, and we are still doing that. That did not end. So that's still in place. And if we can go to the next slide. This next one you see on the far left, pretty extraordinary also. Also involves taxpayers who owe up to $250,000. Okay. So if they're willing to work out an installment agreement with us and it can pay within the life of the statute, we will not request a financial interview. Now, we started this a couple of months before the pandemic evacuation. The reason was, on average, we felt like at the campus, it took 17 to 21 minutes to get the financial information. to set up a payment plan. So we could answer more phone calls, get to the next call, if we cut down each of those hundreds of thousands, maybe millions of calls by 21 minutes as much, right? So we didn't secure the financial statement on those. The risk here is, look, we're the Internal Revenue Service, and I am ultimately a revenue officer. My job, my commitment to the American people is I'm going to make sure if you owe taxes in the interest of those who paid their taxes, that you're going to pay as much as you can without causing a hardship in the least amount of time, efficiency to the government. So we're making an exception to that here. For people who owe up to $250,000 in taxes, we're allowing them a financial an installment agreement without a financial interview. Please take this to your clients. This isn't permanent. This is temporary, and it does not involve your case if you're assigned to a revenue officer in the field. Why is that? You've been through notices for months and months, over a year, before your case is assigned to a revenue officer. You have not complied. You require a field civil investigation to determine whether you're hiding assets, telling the truth about how much you can pay, etc. You will have a financial interview. But if you're still in the notice stream and you work with us, if you show you want to become compliant, you qualify for this program. I do not know for how much longer we will keep this in place. So it's very important, if you get a notice from the IRS that says you owe, please work out a payment arrangement while you're on the phone with us or in the notice stream, because once your case is assigned to the field, this opportunity is over.
So may I ask a question? A lot of our clients and other tax professionals are noticing, right, that the service center can't answer every call, but these have to be done with the service center. You can't wait till it goes out to the revenue officer. Is there any thought of making this available on the online services as well? Just jump up temporarily for the 250,000 installment agreement, because there is a lot of discussion out there about the IRS's inability to answer every telephone call, but people do want to take advantage of this. So is there a best practice for the taxpayer who says, I'm really trying to call? There have been hangups, people are busy, or two, is there going to be any thought about those taxpayers who are computer literate, making it available as an online service?
So you nailed it, Frank, when you said best practice. So what we're doing right now, Fred Shenlin, the Director of Collection, has his team collecting data. So we started doing this in January 2020. So we now have over a year of data, and we're looking at it. What's the default rate? How many people set up agreements versus, et cetera? We're gathering data right now to learn from this flexibility we added. Does it inform a better way of pursuing installment agreements? We don't have the answer yet. I think we will this year. That's Darren being hopeful. They were already gathering this data when I asked for it. So that's why I believe it will come soon. So we'll know whether it's being abused or whether it's being mostly taken advantage of and it's helping people. Is it generating more revenue at lower costs? Is it saving more time to allow us to answer more phone calls? Those are all questions I have, none of which I can answer right now. But I promise you, it's data we're actively gathering already, and it's going to inform an answer to the questions you just had. And yeah, we're open to whatever improves tax administration, but we want it to be data-driven. This next item here is another biggie. So in the past, if you added another tax liability while you were in an existing installment agreement, you filed a return and you owed money, it defaulted your agreement. You got a notice in the mail. It told you to call the number. You picked up the phone, you were on hold for a long time, et cetera. What we've been doing since just before the pandemic, and we're continuing even now, is if you file a subsequent return with a balance due, and by adding it to your existing installment agreement, it will still pay within the life of the collection statute, we will not default your agreement. We will simply add it. Another item that you don't, let me just talk about previously accepted offers. This is important. If you have an offer in compromise that was accepted and the terms of your offer require payments, and you're missing a payment, you're late on a payment, we're not defaulting your offer. Our offer and compromise units are allowing you up to 120 days to make up that payment. That's pretty new and flexible too. Some of you are familiar, and you've heard me in the past talk about employment taxes. We'll talk about trust fund penalties in just a moment. But the federal tax deposit alerts, the FTD alerts, those are unannounced visits by revenue officers to businesses that our algorithms are pretty certain they're falling behind on their payroll taxes. We have not been running FTD alerts since the pandemic, and we're not running them now. The answer why is very simple. The law and IRS policies in place allowing taxpayers to defer portions of their employment taxes, the Social Security taxes, really makes the math hard. So the number of false positives would not be something we would tolerate and send people out to work these. So we haven't been working federal tax deposit alerts for that reason. And here's the most exciting thing I have about other IRS initiatives. We're hiring several hundred people on ACS. They're going to answer phone calls. We're seeing our level of service improve because of it already. We are working rapidly toward the single largest ACS site in the United States in Puerto Rico right now. It will be up and running by December. So we will have over 400 people in ACS in Puerto Rico. Imagine how many more bilingual speakers we will have in Puerto Rico because of that decision. Commissioner is a big fan not only of helping people, but especially underserved communities. And my goodness, a hurricane, an earthquake, and what really makes Puerto Rico attractive to us is when we look at our hiring reports, when we announce jobs, there's a very, very large applicant pool there that we can choose from. And we're finding facilities available quickly there. So our team in the operations support side of the IRS has been working closely with us. We're getting new space, and we believe by next year, we'll have over 800 employees in collection in the campus in Puerto Rico. And it will be the single largest IRS campus collection presence in the United States. It will be by December. It'll even be almost twice as large by next year. And imagine how many more phone calls we can answer in more than one language in less than a year from now, guys. So that's pretty exciting.
So, great. So the next slide will bring us to AI and big data. But before we go there, another COVID thing that now we're seeing a lot of is the employee retention credit and amended returns to claim the credit when they first see a revenue officer. Who owns the examination of these claims and ERC credit returns?
You talking about the Form 7200, Frank?
Yes, sir.
Yeah, so we've got to, it's really important that people also understand this. We eyes on work those cases one at a time. I mean, stopping COVID fraud is a super high priority for us. So they are worked one at a time. So we've got experienced revenue officers looking at those, revenue agents, and the Office of Fraud Enforcement is involved too, but it's an examination program to answer your question directly, Frank. It's an examination program. But Nikki Johnson, who's the Director of Collection Policy, was the first person to run that office. Damon Rowe is heavily involved in working with them to detect fraud and do something about it. But again, importantly, these aren't slipping through the cracks. We look at each and every one of these, eyes on that case, a human being.
Great, excellent. All right, now AI. AI is everywhere. All of our clients are implementing AI. The examination division is using AI. New York State Department of Taxation and Financing, AI guides the audits. So has Collect AI come to the collection division?
Sure, if we could go ahead and move to the next slide, just a word on AI, what it is. I mean, AI is like a recipe in the past. I mean, computer programs are like recipes. You had this chain of events that had to follow in a specific order. And just one little thing that interrupts that chain stopped you from getting a result at all, or you got the wrong result. But today, machines can learn. And so they can detect anomalies that'll happen from past experience and react to it. And when you think about the Internal Revenue Service and the enormous number of data sets and amount of information we have historically, going back many, many years, right, of compliant taxpayers and non-compliant taxpayers, you've got the perfect marriage between human beings and machines, where we've got people helping build these processes that can help detect fraud. And if you go to the next slide here, you'll see some of the examples of how we can use the AI. The automatic repetitive processes, I'll talk in a moment about how we're already using it in offers and compromise, but it can help identify taxpayers who or most likely really did commit tax evasion. It can help us identify ways to reduce burden for taxpayers. A good use case for AI is anything where speed, accuracy, and adaptation are required. Just to give you an example of what we're working on, and this is sort of new, right? At least for y'all to hear about this. So we talked about level of service and being able to answer every phone call. People who want a streamlined installment agreement, Frank, they don't need to talk to us. I mean, do I owe less than a certain amount? Can I pay it within 72 months? If the monthly payment amount meets that, you got an installment agreement. A human being doesn't need to do that. A robot can do that, a bot. And we have literally already built the requirements for natural language authenticated voice bots. Now, it's not quite as simple as, oh, we built the requirements, just like, you know, IKEA instructions handed to somebody and they can build it. The security and all these different things that have to happen. But we turned that project over to IT, and they're now working closely with us on this process. So we are already in process, and by January of next year, we're expecting early next year to have unauthenticated, not the full-blown thing we're trying to build, but unauthenticated voice bots that can answer phone calls and answer basic questions about forms and how to make a payment and things like that. And as 2022 and 2023 go on, we believe we're going to be closer to having bots that can work in an authenticated world and ultimately speak in dozens of different languages. Imagine all the underserved communities we can help when we can speak in dozens of different languages the taxpayer understands, and they can set up a payment agreement without having to wait on hold for somebody. And that's the goal here. The goal is for taxpayers who can fix their own tax issue, help them to do that so that the live assistance calls deal with taxpayers who have a hardship or a very complex call and they need to talk to a person. We're also using robotics, as I said I was going to mention, in our monitoring OIC site. So when you get an offer in compromise, you're required by law to stay in compliance for a period of 5 years. And you can't be late on your payments. And so we have people historically who monitor those offers in compromise on a regular basis. Well, we are now using bots to do that. So for the payment process, we've already seen a reduction in processing time of 93%. And on monitoring whether or not they're staying in compliance for the 5 years, they've increased processing time by reduced the age of the processing time by 87%. So that's really incredible. I want to say this about the use of data analytics, and y'all will hear from Damon later, Damon Rome. I mean, the Office of Fraud Enforcement has been making extensive use of new data sets to create a whole battery. I mean, like we've never seen before, layers that analyze taxpayer behaviors, such as third-party income, relational databases, FATCA information, virtual currency, things like that, to get a better picture, better than ever before, of the likelihood that there are really badges of fraud or that the case is going to be accepted by criminal investigation or DOJ. You heard Jim mention a minute ago, conviction rate of over 90%. Also, and this is something we're talking about now, this isn't done yet, but those data sets I just talked about are increased access to FATCA, for instance, And the tools we have now to detect virtual currency, we can track it on the blockchain, we can value it, et cetera. We've got subject matter experts all over the country now that work for us, IRS people. What if we could take that data and add it to our current systems that our collection, inventory, delivery, and selection office uses? I mean, these are our data scientists at the IRS who routinely and regularly update the filters and algorithms that determine, is this a campus case? Is this a field case? Should it go to a private collection agency, et cetera? Imagine if they could add the information about this additional income and these other relational data sets, if we could add that to picking those cases, because you want the complex cases in the field and you want the simpler cases that are difficult in the campus, and you want the cases where taxpayers can help themselves to be treated mostly through notices, QR codes and things of that nature too. So those are some of the ways that we're using AI and bots already, and really exciting on the horizon. We're going to see where taxpayers who don't need to talk to a live person, it'll almost feel like they're talking to a real person, and set up payment plans.
Excellent. All right. Before I turn it over to Mr. Carpenter, we on the private bar should also be thinking AI. There are programs now that will populate a 433 from third-party information using the IRS transcripts, comparing information available on your credit reports, and they'll tell you when your statutes of limitations will expire, whether you should be requesting first-time abate, whether this case should be currently not collectible. It takes a lot of data, puts it together, and helps the tax controversy attorney. There are programs that are doing big data on penalty abatement requests to write them up. If you're not there on your first time abate, it writes you a little report. Like once you put in some facts as to whether or not you're entitled to a reasonable cause penalty abatement. And then those of you who are doing forensic audits, there are these programs that are being written now that go through your QuickBooks and find revenue potential for the Internal Revenue Service. So that if you're preparing for your eggshell audit, you're preparing for your audit, it tells you, hey, you should be ready for the IRS to ask you these questions because some of these numbers and the ratios don't make sense. So it's not just the government that's using AI. It's all of us in our practices should be incorporating AI. But against that, let's go to the next thing. Mr. Carpenter, we talked a little bit about high-income non-filers. Why don't you tell us a little bit about what you see in your practice and the clinic on high-income non-filers?
As James Lee mentioned earlier, the chief of the IRS criminal investigation, high-income non-filers is now a very high priority with criminal investigation. The first thing you need to understand is that high income, the IRS considers that to be at least $100,000 of income. So we're not considering somebody who has $1 million of income, $2 million of income. It's $100,000 or more of income. And all tax professionals come across individuals who have at least $100,000 of income, and for whatever reason, they have not filed their returns. What we need to do is to advise all of these individuals to correctly prepare their returns and file them as soon as possible. And the reason is this: bad things can happen to non-filers. What are some bad things that can happen to a non-filer? Number one, the IRS can file a substitute for return for them. If they do, the IRS is not going to give them any deductions that they will be entitled to. They're just going to list their income that the IRS obtains from third-party sources, such as W-2s, 1099s, K-1s, property sales transactions, gambling winnings. They're not going to give them deductions that they're entitled to. Bad thing number two that can happen to them, there are failure to file penalties. Bad thing number three that can happen to them, there are failure to pay penalties. And the ultimate bad thing that can happen to them, as James Lee mentioned, possible criminal charges could happen to them. And so again, we all come across individuals who have at least $100,000 of income, and for whatever reason, they're not filing. We need to stress to them that they need to prepare correct returns as quickly as possible and file them, because this is now a very high priority with the IRS, and at some point, the IRS will find them. Thank you.
All right. So I was going to say, Mr. Broyles, did you want to add like best practices? We now have a non-filer come into your office. What's our best practice?
Well, actually, I was gonna ask Darren about maybe we call this best practices. It is my practice to never, ever, ever give a live return to a revenue officer, because in my experience, they don't always process them properly. And there have been situations where they've thrown them in the admin file and not process. Or the same goes with revenue agents. When I've given revenue agents live returns, and I stopped doing this about 20 years ago, but early in my career, I would give live returns to a revenue officer, a revenue agent, and sometimes they didn't get processed properly. So for about the last 20 years, my practice has been to file that return with the proper campus and give a copy to the RO or to the RA and tell them this, this is a copy I have filed, and oftentimes they'll process that return as a duplicate, which I think causes other problems internally. But I don't give live returns to an RO or to an RA. And Darren, what are your thoughts on that?
It's your prerogative. We want you to file. So if you have that concern and you want to file your return directly with the campus and give us a copy with proof of mailing of the return,
Sure,
please.
sure.
It helps if we get proof that it's there. Ideally, when I worked in the field as a revenue officer, I knew the coding to put in the margin and how to process the return. I hope I did every single one of them right, Joe. Is it possible sometimes that thousands of people doing the job, sometimes everything doesn't go perfectly. So I can tell you, if you file it with the revenue officer, if you're continuing to work with them to set up a payment agreement, and they need to wait until the return is accepted for processing, et cetera, kind of speeds it up if you file that return with the RO, but at least make sure they have a copy.
Another practice tip, and I don't just tell this to non-filers, to non-filers and people who are out of compliance with their payroll taxes. On the day they hire me, I tell them, I'll work with you to get you, to solve the problems that you've created, but you got to stop doing it. From this day forward, you got to file on time, pay on time, deposit on time, or you're just wasting your money on legal fees. I'm not going to be able to help you if you keep doing it. So I think all of us as practitioners should be telling our collection clients, I'll work with you to resolve the problems that you've created in the past, but you got to stop doing it going forward.
Mm-hmm. That's the same message that we share with taxpayers. I mean, it was called one-stop service when I started with the Internal Revenue Service. Make sure you get a complete holistic compliance accomplished with the taxpayer, filing to make an estimated tax payments, whatever needs to happen. Because, let's face it, no matter how courteous I am with the taxpayer or how generous I am in the way I treat them, nobody really wanted to meet me or work with me. And me showing up unannounced at their home about an unfiled return was not the highlight, I'm sure, of their day or their week. So hopefully after I work with them, I never have to meet them again. As wonderful of people as they may be, there are many other taxpayers I need to work with who don't want to work with us.
So quick question again on best practices. The taxpayers are now becoming aware of the IRS initiatives that failure to file is a crime. Failure to file can be referred to the Criminal Investigation Division. So taxpayer comes in. We know that there is a revenue officer who's looking for unfiled returns. What is the best practice to ensure that, hey, we file these returns with the revenue officer, we comply, that it will not be referred to the Criminal Investigation Division? So that's a bad way to ask the question. Better way to ask the question is, what factors would lead a revenue officer to take the returns that a practitioner has just turned over and refer it to the Criminal Investigation Division? Does partial payment help? Does and offering to enter into the collection alternative help? What would be the best practice for a professional dealing with a revenue officer to minimize the consequence, especially the criminal consequence of late filing?
The simple answer to this, Frank, is, I mean, if your activity has been, if we believe there are badges of fraud, that it was criminal, that there was willful evasion of the tax, okay? That'll probably be referred to criminal investigation. Typically, taxpayers that I've seen that we've referred to CI for willful evasion, and we're looking at more than one tax year, significant amounts. They've enriched themselves. There may be some schemes involved. They're trying to hide assets, shield assets, and different people, different names and things of that nature. I mean, not to oversimplify it, but when there's fraud, you just know when you've been trained to conduct a civil investigation to detect fraud. Somebody who delayed filing for a couple of years or 3 years because they owed a little bit on each return and they were afraid of having an IRS lien or something, and in their mind, they think, well, when I file the return, that'll happen. If I file when I can pay, it won't. And the next thing you know, they're 2 years behind, 3 years behind. If they meet with the revenue officer, meet with you, the practitioner, and you get those returns filed and you set up a payment or a payment agreement or establish thorough hardship, that's unlikely to be a fraud case.
So,
yeah, Frank, I agree. I rarely think about criminal fraud in a non-filer. I mean, I deal with non-filers, not daily, but on a weekly, monthly basis. I get, I hear from a non-filer, and I rarely am concerned with criminal issues. It would have to be something more than just non-filing. It'd have to be, large amounts, like millions of dollars of income, or something really, out of the ordinary.
What I have behind curtain number 2 is the real thing, though, because we did sweeps. We did the high income delinquent filer sweep. So you saw the TIGDA audit. We were focusing already. We were turning back on our non-filer programs. We knew there were high income non-filers, but please be aware, when you've got limited numbers of revenue officers to work every case, and you've got more legally perfected debts owed the United States and balance due cases, then you can work with your revenue officers. Where are you going to spend your resources? Pursuing money, there's no dispute. Taxpayers owe it, that money belongs in the Treasury, go and get it. Or are you going to pursue non-filer cases where the taxpayer may or may not owe anything? And so since tax year 2016, we work every single high income non-filer case. They all get treated. They're worked either by a revenue officer, ACS, or they're worked through the notice stream, but those cases all get treated. So we did these but the TIGDA audit was very helpful for us. I want to compliment them. I appreciate they helped stimulate something we were already working toward, and that is how to determine the high income non-filers that deserve priority. So we identified using our sweep, our revenue officer compliance sweep program we already had in place, where we make sure we have presence in every community where we formerly had brick and mortar, and we don't now, but we still have enough high risk work that we need to go there periodically and make sure taxpayers don't forget about us, and we can try to stimulate better voluntary compliance. Could we map those high income non-filers? We did. And I'm telling you, we mapped people with millions of dollars in income who hadn't filed for more than a few years. And we were successful in getting some of these taxpayers to become compliant. We really did. We secured returns, we secured full payment, we secured partial payment. But believe it or not, there were some who still didn't want to comply, and those cases have already been referred to criminal investigation in less than a year. And the secret there is the Office of Fraud Enforcement and all those extra data analytics we were talking about, relational databases, that battery of layers of analytics of all the information that we either didn't have before, and now we have it, or we found a better way to collate the data we have had to really figure out, this is a fraud case and CI is going to take it. DOJ will want this case. This is a case you should work and refer to CI. So non-filer cases are in that grouping. And that was Operation Surround Sound, which was the successor treatment of the high def sweeps we did last year. And we're doing more high def sweeps. We just finished. We ran them from April through February 2021 through June 2021, we couldn't do them face to face, so we did them virtually, and we're getting the results. They're coming in now. So this is not going away. As soon as we get back to normal, you're going to see revenue officers doing compliance sweeps about high income taxpayers, period, high income balance due and high income non-filers, and expect this to be part of the foreseeable future.
Excellent. All right, Mr. Carpenter, Ms. Boyles, let's go to the next almost fraud area, which is the trust fund recovery penalty. Tell us about the trust fund recovery penalty. I guess, Beth, could you advance the slide to the trust fund recovery penalty, slide 26? And Mr. Carpenter, why should we worry about the trust fund recovery penalty?
The trust fund recovery penalty, let me mention some background information on it first. As all of you know, when a company pays their employees, they withhold both federal income tax and FICA from their paycheck. These withheld taxes need to be held in trust for the IRS. It is not the company's money. It is the withheld money from employees that belong to the IRS. And so Congress has set up a mechanism to help the IRS collect these withheld taxes. And that is Code Section 6672, which, as Frank mentioned, is referred to as a trust fund penalty. You need to understand that the term penalty is a misnomer. In essence, the IRS wants to be paid their withheld taxes. Once that happens, either by the company itself or by anyone who's been assessed this 6672 trust fund liability, the penalty goes away. And so the IRS just wants to be paid their withheld taxes. And you can't blame them, because they have to give individual credit when they file their tax returns for withheld federal income tax, whether they've been paid by the company or not. In order to be assessed the trust fund penalty under Code Section 6672, it requires two components. The individual has to be a responsible person, and their actions need to be considered willful. What is a responsible person under Code Section 6672? The courts have said that a person who has authority within the company to exercise significant control over the business finances is a responsible person, whether or not they actually exercise that authority or not. And so what factors does the IRS look at to determine whether somebody is a responsible person? Number one, the ability to sign checks. Number two, the ability to direct where payments go. Number three, the ability to hire and fire employees. Their status as an officer within the company. How does the corporate bylaws define their status and their authority as an officer? Direction as to which creditors get paid. In a trust fund penalty situation, you need to understand is that multiple people working for a company can be deemed a responsible person. It isn't just one person. You can have a company that can have 5 responsible people, 10 responsible people. Then you get to the second prong, which is willfulness. For 6672 purposes, the courts have defined willfulness as a voluntary, conscious, and intentional act to prefer other creditors over the IRS. So once a responsible person knows that the company has unpaid payroll taxes, they have one obligation, and that is to pay the IRS before anyone else gets paid, before paying their employees, before paying the business rent, before paying the utilities, before buying supplies. Their primary obligation is to pay the IRS once they know that trust fund taxes have not been paid. The IRS conducts interviews of people that they suspect may be a responsible person. If we can move to the slide that has the Form 4180 on it.
Slide 32. Next, I'm sorry. Next slide.
Form 4180 is a form that the IRS uses when they interview individuals to determine in their position, in their opinion, whether somebody should be assessed a trust fund recovery penalty. It is very important that if you're representing a client who has unpaid payroll taxes, unpaid trust fund taxes, that this form be carefully reviewed, because there are key pieces of evidence in this form that the IRS will use to assess a 6672 penalty against someone. If the IRS wants to assess a 6672 penalty against someone, they will send out a letter 1153. We can back up the slide a couple of spots to the letter 1153. One more, this one. Let's go back one.
Go forward one. Thank you.
Okay. IRS uses Form 1153 to advise an individual that they think that they're liable for an unpaid trust fund. It is important to understand is that there is a 60-day window to appeal this. So just because a revenue officer determines in his or her opinion that somebody should be assessed a trust fund penalty, the individual has a right to appeal this. They have a right to go to appeals. However, the request for appeals needs to be filed within a 60-day period. So it is a set in stone 60-day period. Unless it is addressed to an individual outside the US, then it becomes a 75-day window to appeal. So it's extremely important that if you have a client that receives an 1153 letter and they feel that it is appropriate for them to appeal this, that you calendar the 60-day period. Once a trust fund penalty is assessed against an individual, the IRS can go against their personal assets. They no longer have to just seek out the assets of the business that hasn't paid it. They can go against personal assets of individuals. And again, the IRS can assess a trust fund penalty against multiple individuals within a business. And so they can seek out individuals' personal assets to try to collect on trust fund penalties. Now, a 6672 penalty is strictly a civil matter. The IRS wants to be paid the withheld portion. Once it is paid, the trust fund penalty goes away. However, there is a second aspect to unpaid payroll taxes, and that is Code Section 7202, which is a criminal component. If we can go to the slide with Code Section 7202 on it.
72, 35, 34. Next one. Yep.
Okay. So if you look at a comparison between 6672, which is strictly a civil matter, and 7202, which is a criminal matter, you see that the wording is very similar. And so how does a tax professional try to distinguish whether something is a civil matter versus a criminal matter? And you look to what is considered badges of fraud. What has the individual done? How long has the non-payment of withheld taxes been going on? Is it 1 quarter, 2 quarters? Has it been going on for 5 years? How large is the amount of unpaid withheld taxes? Is the business still doing the same problem? Are they still not paying the withheld portion for their current employees? They're being responsible people. How much of a salary have they been taking out of the business? Are they taking out a $30,000 salary for themselves? Are they taking out a $500,000 salary for themselves and instead not paying the IRS their withheld portion? Are they also taking out loans or other distributions from the business? Have they moved assets out of their name to avoid the IRS trying to collect upon them? What kind of communications has been made by the IRS to the responsible people saying that, hey, you know this business has not paid its payroll taxes. Your first and primary obligation is to pay the IRS their withheld portion, not to pay yourself, not to pay the other workers, not to pay the rent, not to buy supplies, but to pay the IRS the withheld portion. People who ignore those warnings are the ones that wind up with criminal liabilities. And the IRS has made it a very significant priority to them to prosecute individuals on the non-payment of payroll taxes. just in 2021, I've represented 2 different clients already on criminal matters, where the IRS has taken a 6672 matter and has made it a 7202 criminal matter. So these are very serious matters, and you have to, if you have clients that are doing this, you have to look at badges of fraud and see the factors that are taking place and determine how serious of a matter this is, whether it's strictly a civil matter or a criminal matter. Thank you.
Now, I have a couple of practitioner notes. Oftentimes it's very obvious who the responsible person or people is or are. Sometimes not so much. In those cases where it's not so obvious, if you're the tax professional representing someone who's saying, I'm not a proper target for this assessment, in those cases, I like to help the revenue officer do their work. And I think that I mentioned this to Darren in our last conference, and I think Darren Wraith and I brought me. I have downloaded, if you Google Form 4180, there's a 4180 form that you can download and type in, and I prepare that form for the revenue officer to help that revenue officer conclude that my client is not the responsible person. Darren, are you still raising your eyebrow at me?
No, I mean, there are, as far as responsibility, in my experience, people who can sign the tax returns, who can sign the checks, especially, and they have the authority to disperse the funds and they do something else with it. That's going to be one of the important indicators. Sometimes somebody else is doing it who's not the officer, but the trust fund investigation, if it's done in a thorough way, it's going to show you that somebody, if someone else directed them, you're going to find out who that is, and you're going to get to the bottom of that. You know, while we had those 2 statutes up, I thought it was curious. I like the way y'all put these 2 statutes side by side with one another. As your audience reads these and sees the remarkable similarity in them, they may not know the reason why, and that's because both statutes come from a parent statute from 1918, the Revenue Act of 1918, Section 1308. So originally, when we got this authority, it was both a criminal and a civil statute, and it got bifurcated here, and you have the 2 of them, and that's why they read so similarly, and why many of the things to investigate whether you're a responsible officer for the trust fund penalty has some elements in common with the 7202 willful failure to pay, and also with the pursuing injunctive relief under 7402.
Yeah, Darren, you make a good point. I think revenue officers often focus almost solely on who signed checks. And so, and as I said, in many cases, it's not, I mean, who's responsible really isn't, you know, hard to figure out. I mean, if there's one shareholder, he or she's responsible. It's pretty hard for that person not to be responsible. Another practitioner note, getting back to what Richard was saying about how these cases can be criminal, but the criminal cases, I think, sort of like was it Justice Frankfurter, or one of the justices said, I know it when I see it. I mean, if someone is you know, pyramiding multiple periods, large amounts, transferring assets. I've seen taxpayers run up trust fund liabilities in one entity, and when the IRS starts banging on them, they'll form another entity and do the same thing in the next entity. And
right.
After 2, and by the time I was hired by a guy who had done, he was on his 3rd entity. And I explained to him how bad that looked from a criminal perspective. Said, these are badges of fraud. Every time the IRS contacts you, you form a new entity. That looks like criminal fraud to them. And he's like, and he thought he's just trying to save his business. No, that looks like criminal fraud. So, but I think those cases, you kind of know them when you see them. Someone who's struggling, someone who's a hardworking, business owner struggling to keep their company afloat, who's doing things they shouldn't do, probably not going to be prosecuted criminally. Someone who's got multiple entities, large amounts, transferring assets, paying themselves large salaries, yeah, that person is more likely to get prosecuted.
Yeah, Joseph, I think you made some really important and accurate points. The IRM is a rich source for all the practitioners out there. If you're representing a client who's at risk here, to get a good idea what their exposure is, IRM 5.7, IRM 5.17 cover the civil aspects of it, and IRM 25 would cover the potential criminal aspects. And Joe just hit on one of the big ones, successor entities. One of the last potential fraud employer cases I worked as a revenue officer involved a restaurant owner who, go into bankruptcy, set up another one, get a new EIN. Well, and they're pyramiding taxes, and they are on their way to establishing what they're doing is on purpose. It's willful failure to pay. It's 7202. It's classic. They can add to it by things like nominees, using fictitious partners, a wife, relatives, friends, etc. False statements is a big one. Tell the truth when you give those financial statements. Our goal is not to put people in jail, though. Let me share something that doesn't have to be a secret, gang. The type of case that Mr. Broyles just talked about, we look at those every 60 days. There is a list of the egregious, non-compliant taxpayers. Since Caroline Cirillo was the assistant principal deputy secretary, principal deputy attorney general for the tax division at DOJ, back in 2015, we set up the Egregious Employment Tax Initiative, and we identify every year who are employers who owe payroll taxes above a certain dollar range and a certain number of quarters. And we basically look at the type of case that is potentially an injunctive relief or a criminal case. And the director of field collection and their executives meet every 60 days and talk about the status of each one of those cases. And it's a long meeting. There are a lot of businesses on that list, and it makes me feel good every time they see one that they got in compliance. But guess what? As Chief Lee said earlier, employment taxes are a priority, and I believe still that the majority of fraud civil referrals, NCI, come from collection, and the majority of those are employment taxes. So you have to take this very seriously. We know who you are. We know what you're doing. So this is going to end in a seizure, or this is going to end in an injunction, or it's going to end in criminal investigation. So please stop pyramiding payroll taxes, because people's jobs depend on it. Ultimately, that's who this matters to. Most Americans work for a small business, and when the things we're talking about reach that point, if they've got 72 employees, 72 people lose their livelihood. That's not good.
I think we all agree payroll tax evasion is theft, right? You're stealing money that doesn't belong to you. On the other hand, we would be remiss if, as tax controversy professionals, we don't look to make sure that the IRS has satisfied all the conditions preceding to the assessment of the payroll, the trust fund recovery penalty. One, based on a case called Lochner years ago, there's a 3-year statute of limitation to assess the payroll, the trust fund recovery penalty. That's why the signing of the 2750s is so important in these cases. 2, remember that the interest on a trust fund recovery penalty doesn't start until the assessment. So sometimes we see that as a mistake. 3, the tax court has now said that the 6751B's requirement of supervisory approval applies to the trust fund recovery penalty. So in every trust fund recovery penalty case, you should do a Freedom of Information Act request. More and more, we are getting back that some files have been destroyed or they can't be located. That has, in my experience, resulted in the IRS saying they cannot meet their burden of proof or burden of production because they don't have the supervisory approval memo required by 6751B, and then they abate the assessment. 3, when the file isn't there, and more, many revenue officers send the trust fund recovery penalty letter instead of to the taxpayer's home, they send it to the business. Sending it to the business is not sending it to the last known address. Those of you who do lots of income tax cases have seen that if a notice is not sent to the last known address and it's not received and a timely protest isn't filed, then the resulting assessment is a nullity, it's void and can be abated. Then finally, in these cases, you should always look to see if the notice of assessment was sent, because interest doesn't start running until the notice of assessment is also sent to the last known address. So there are 5 code sections. You should always have a checklist, compare against your FOIA and the transcripts, because although you may not be able to substantively defeat the liability, a procedural win is as good as a substantive win. The assessment is abated and your guilty client may not have to pay the tax. It's important to do this in civil cases and it is important to do it in criminal cases. And because, look, the only way the voluntary compliance system works is if both sides scrupulously follow all of the rules. We can't overlook one rule for another because we know, hey, the taxpayer is a bad guy or isn't a bad guy. We have to insist that all of us that are professionals in the system comply. Especially my pet peeve right now is those people who disclose those rich people's tax returns. What happened to the disclosure rules? I mean, we work in a system, we make our livelihoods from this system, and we have to make sure that we all follow the rules of the system. That's why we trust them, and we trust our brothers and sisters who work at the Internal Revenue Service. I think do we have any more time, or have I used all our time?
We're out of time.
Yeah, I'm sorry. We knew that our outline was longer than we could possibly cover, right? There is a lot of information about the IRS now collecting from assets outside of the United States. That's the last of the hot areas. Please review the slides and the material. We made them intentionally longer than we could cover because this is an important hot area, especially in New York, New Jersey, California, where we have lots of immigrants and children of immigrants, where there may be collection or revenue potential outside of the United States for assets that are titled to our clients who may owe taxes. Thank you, Darren, thank you very much for the outreach, Mr. Carpenter, Mr. Boyles, and thank you, audience, for your attention.
Thanks for having me.
No, thank you, gentlemen. This was an amazing presentation. I'd ask for each of you, we've got about 40 questions. If you could maybe spend a few moments answering those questions to our audience, that would be great. We are going to break away for about 12 minutes. We'll be back sharp at 12:15 to hear remarks by our IRS commissioner and begin our luncheon. Thank you, everyone. We'll see you in about 10 minutes.
Thanks.
Thanks.
Chuck.
How you doing?
Good. How are you?
You know,
Welcome back, everyone. I hope you guys have enjoyed the first half of our Institute. What an amazing panel we've had so far. It is my honor to introduce our IRS Commissioner, Charles Rettig, better known as Chuck Rettig. Do they call you Chuck at the IRS or Charles?
you know, I think maybe several hundred times I've asked people to call me Chuck, but Chuck is the name. It's either Chuck or most people is Commissioner, and then I have to correct it to Chuck, and then it's Commissioner, and then it's Chuck. You know, just keep going back and forth. You understand?
Well, wonderful. Well, I have known Chuck for over a decade, or Commissioner Rettig now, excuse me. He is truly a selfless person who, as a practitioner, would always lend a helping hand to anyone in need. I've met him at events, speaking institutes, and anytime I had a question, he'd always be there to help you, to guide you, to put you in touch with the person. And then he got appointed as our IRS commissioner, and he took those traits as a practitioner and took them with him to the IRS. He has implemented so many programs that are assisting taxpayers. There's now over, I don't know, is it 100 languages, 200 languages that we have right now in order to understand documents. Many programs that are taxpayer sensitive, just helping us out at the IRS. But due to time constraints, I could go on and speak about what an amazing commissioner we have leading the helm. But we will let him speak because he loves to speak. So Chuck, you take it from here.
Thank you, Ronnie. And I understand I'm constrained to 3 hours. So, you know, I'll try to be as fast as I can.
You
But
could go an extra 10 or 15 minutes. So don't.
you know, I saw the schedule. I want to be respectful, you know, to those who follow, and I get it. And very appreciative to be included. You know, thankful, certainly thankful to see all the, you know, the names of my friends and colleagues that come up here on the Zoom. And, you know, let me start by basically expressing, you know, my thanks to all of you for your patience and understanding during the past year. Pandemic's been difficult on everybody. It's been difficult on practitioners. You know, some of the IRS activities that we took during the past year, if anything, did not make your lives easier. And we understand that. And every agent, every person at the IRS has a handle on that. And, you know, if you go back into, you know, March of 2020 and look back, and I try to get people to put their mindset back into March of 2020, as opposed to maybe, you know, July of 2021, or, you know, at some point in 22, 23, et cetera, et cetera. And, you know, when the pandemic started coming around, we started hearing about COVID, we started hearing about this and that, it wasn't clear what we had. And I think in retrospect, I think history will be kind to the Internal Revenue Service. We did our best. We didn't always get something right, but we did our best, and we did it with as educated of a viewpoint as we could put together for the moment in time. You know, health and safety of everyone, you know, the employees, practitioners, taxpayers, and others was paramount. But one thing unique to the IRS is in March of 2020 is also, you know, we're at the height of issuing refunds and refundable payments to people across all lanes. And so we shut down in the end of March with the knowledge that we really have to get on this right away, figure out a path forward to be able to provide meaningful services to people who deserve them. And in some areas, I think we did quite well. In others, we had to develop a learning curve. It took us a little bit more time and understanding, but you know, I still consider myself a tax guy, if you will. And I think that this was really an area that, you know, public and private sector worked well together. You know, I see Frank Agostino on here. You know, when we got called upon to do economic impact payments, Frank and others were instrumental in helping us get our EIP outreach materials into 35 different languages. Critical, right? And the outreach into different communities. Right now, we have a book of approximately 18,000 different community organizations, state and federal organizations and whatnot throughout the country that we work with in terms of outreach that for the most part, we did not have in March of 2020. And that's a tribute really to each of you and others in the community who realized, you know, what I think we all grew up with, and some of us sometimes lose track of it, but the tax administration belongs to everybody. And, you know, it's a privilege to be able to help people and particularly people that don't have a voice. They're operating in communities. Maybe there's language barriers, maybe there's just, physical location barriers, rural communities, broadband type of situations. And I think that this really, the best of the best came through for a lot of people. And that's not to say that we got it right. It's not to say that it was uneventful or without extreme difficulty for both taxpayers and practitioners. Critically, from the EIP perspective, we needed to get in touch with people who were not in touch with on an ordinary basis. We also needed to do a tremendous amount of programming. We needed to figure out a lot of requirements. But the critical area that I keep trying to have people look to is sort of the unsheltered homeless people. And we were not going to do that on our own, but through our outreach efforts with, community and regional and state and federal and other federal agencies and all the rest. Overall, I think we did quite well. That's not saying that everybody who received an economic impact payment, everybody who's eligible for an economic impact payment should receive it, but the effort was certainly there. And as you all are aware, we're in the middle of the third round of EIPs. And so, again, a lot of what I've been doing in terms of outreach and speaking is asking people to help us help others. This is not over. And we'll continue at least throughout this year. I did see some language recently about the possibility of a fourth round of economic impact payments. And I'll report that, if so, and if IRS is tasked with that, we got it. We'll be ready and we'll do as called upon. Turning to the advanced child tax credit, I was on a call toward the end of last week where somebody made a comment, and I think as most of you are aware, the first round of payments, monthly payments on the advanced child tax credit were received yesterday. We're looking at the systems, we're looking at the recipients and everything with that. We're going to have some slight adjustments before the August 15 payments, but for the most part, again, these went out in a seamless fashion. That's not saying that it's perfect, and you'll never get, I think, somebody to say, I never said something on the outside was perfect, let alone, on the inside. But to frame it with respect to the advanced CTC payments, the same people who did the program at the Internal Revenue Service for that also do our filing season programming for filing season 20, filing season 21, EIP 1, 2, and 3. And it's only half in jest when you hear me say that these folks have not slept since March of 2020. A lot of these people really dug in and gave it their best. And, we took a lot of heat. A lot of people were asking us to push off the deadline for tax season in this year from April 15 to something like July. Well, the statutory requirements for the advanced CTC were that we begin issuing payments in July. And we extended filing deadline 1 month to May 17, April 15 to May 17, to give some relief to the outside community. But quite frankly, we were ready, our systems were ready. And I think filing season this year supports that we were ready. We've had a great filing season so far, working a lot with people on the outside, a lot of effort. And what started with the EIPs in terms of outreach and communities has branched out to a lot of different lanes that I think that, in 2022 or such, I think that we're going to see that the relationships, if you will, a silver lining, the relationships that were developed through the EIP scenario and the outreach in really a horrific time, right, during the pandemic and COVID, I think they'll serve tax administration quite well going forward. We're on the cusp, I think, of some potential historic funding for the Internal Revenue Service, and our line of sight in terms of where we are really has not changed. I think the initial focus that you're all aware of is the underserved communities around the country, trying to help people where we can help people. Tremendous, one of the things I'm hugely proud about, and unfortunately, some people will say, and this is Chuck saying, unfortunately, wow, look what you've done. What I've done in the agency is open doors for employees who are passionate about trying to make things better. And, sort of letting them know that I have their back, where we head. We're not going to get it perfect. I made mistakes on the outside. I've made mistakes on the inside. That, mistakes belong to the commissioner, but let's try. Let's try to be innovative. Let's try to be creative. Let's make things better. Let's enhance the relationships we have, certainly with practitioner groups and taxpayers. And so an area that, you know, the only way I can say it is the way I say it, which is I'm incredibly proud of the people at the Internal Revenue Service. But at the same token, I'm a little embarrassed to be the person who makes some of these reports. And this piece is around languages. You know, as you know, I grew up in Los Angeles and multicultural area, and you know, my wife is multilingual, and you know, I'm a little bit in awe of people who can just flip from one language to another. I have in-laws who live in Southern California, Little Saigon, who basically do not speak English. And so I have a particular line of sight there. And coming on board, a few of the questions that were asked were, well, what are we doing in the, you know, for the communities that are not comfortable interacting in English? It does not mean that somebody's not fluent in English or that they can't understand English, but it's a comfort factor. And remember that we require people to comply, you know, in a voluntary nature, but it's, you know, voluntary until it's not. And the inability of the service to really, I think, be respectful of the different languages. We live in a country where we open the arms for people to come to the country because we want people to come into the country, you know, and I know you all know that, you know, as I said, my wife came into the country as a refugee. My dad was also an immigrant. And, you know, there were times while I was in LA that we used to joke because we'd have, you know, 25 people over around the holidays, and maybe 2 of us were actually born here, literally, and the other 23, excluding children, but the other 23 were not born here. They were from everywhere. And I think that that's great. And I think that that's what makes the country great. Moving into the Internal Revenue Service, I think we're very proud to be here. It's unfortunate that it's in 2021, but the pride factors are, for the first time in the history of the IRS, the Form 1040 is in English and Spanish. There's a Schedule LEP where individuals can check a box as to up to 20 different languages, which one they want us to interact with them in writing going forward. Translation services for the phones are now in more than 350 different languages. You're soon going to see considerable expansion in the Internal Revenue Service in Puerto Rico. In record time, we signed a lease through GSA in Puerto Rico, and one of our largest call centers will be in Puerto Rico, and that's a reaction to the island having endured, you know, 2 hurricanes and an earthquake, and folks leaving Puerto Rico to come up, you know, for a different life here and maybe go back when Puerto Rico rebuilds itself. The social aspects of the Internal Revenue Service is that we can go somewhere and drop in, you know, 500, 1,000, or maybe ultimately 2,000 jobs in a community. The recent posting that we had actually in Puerto Rico, we got more qualified applicants than we were posting for positions. Whereas normally we get somewhere around, you know, a third, if you will, are qualified applicants, and maybe about 80% are actual applicants. But we have some towns that we've been in and tried to expand services where we would go out looking for 1,000 or 2,000 people and get 300 or 400 applicants and have less than 100 turn out to be qualified applicants. So Puerto Rico will be big for us. And I'm not sure if Darren, I actually lost track if Darren was on this morning or this afternoon, but Darren Gail has been huge in supporting that effort. You know, the benefit is to help them build back Puerto Rico. And then similarly, the other side is to, you know, help people. And then the byproduct, which is a positive, is the majority of those folks are bilingual. So coming back to the language side of the house and services and views of really the underserved communities, I think, you know, you should know that we take that to heart. We're very proud about that. We're incredibly supportive of the president's budget proposals. There's 3 separate proposals that we'll know with respect to one of them by next week or the week after. But in combination, these 3 proposals will, I think, provide epic funding for the Internal Revenue Service and allow the employees of the Internal Revenue Service to provide services that every taxpayer deserves, every practitioner deserves, and every employee wants to give. You know, it goes without question that people at the Internal Revenue Service want to do their best. but they've been hampered by funding issues for literally most of our professional careers. And the administration is on target with it. I think that significant parts of this are bipartisan. There's pieces that get added to bills that cause challenges to bills going forward. But in the underlying discretionary budget request of the administration, $13.2 billion, it's a 10.4% increase for the agency over the enacted level from last year, which is obviously welcome. It's an understatement by us. But the most significant parts of that budget request, the discretionary budget request, are in taxpayer services and business systems modernization. It gets written up a lot that, enforcement. Do the math, run the numbers, see where we are. We have to modernize. It's a necessity. We need to try to keep pace with the rest of the world. Modernization will give tax professionals essentially their own portal, the ability to interact with us in a digital world in a digital manner, which I think is respectful. I think it's what tax practitioners and taxpayers deserve. But we're not leaving anybody behind. The budget requests dictate a fully funded series of tax around the country, that we open, close tax, and we staff them, that we appropriately staff the ones that we are able to have open anyway. As many of you may be aware, in that series, our people ride a circuit. And so we have areas that through attrition, we were not able to refill the positions there. So we pull taxpayer assistance folks from different areas to go there on a circuit, if you will, and fill in on specific days and such. We're trying, and it's not a perfect scenario, but we can never lose sight of traditional services, the in-person type of services, the interactions in rural communities, the presence of the IRS in these communities. I couldn't be more proud of IRS employees during the pandemic. And I'll just, I've got a lot of these, but I'll just give you one, that the Memphis employees 2 years in a row set a record for contributions to the food bank in Memphis. And they did that as IRS employees. When I got on board, it was like, please don't say you work for the federal government or you work for Treasury, but let people know you work for the IRS. And particularly when you're out in the community and doing these community activities, you work for the IRS. With the funding that we're potentially looking at coming in our direction, we will have, I think, historic hiring. And it goes without saying that we need historic hiring. So one of the challenges we've given to our employees is to serve as an IRS ambassador. Go out and tell people who you are and why you're proud to be with this agency and the importance of this agency to the country. The IRS annually receives, the gross receipts of the IRS on an annual basis are approximately 96% of the gross revenue of the United States of America. So if you want education, if you want infrastructure, if you want this country to be all it can be, if you want this country to give back not only to the people located inside the country, but people located outside the country, we need the IRS to be successful. And I think that the efforts of the IRS employees in the delivering 3 rounds of economic impact payments during a pandemic, after we shut down in March of 2020, CARES Act came online. We switched as best we could to a virtual environment. Our customer service representatives, the folks who answer the phones, we went from a 3% teleworking eligibility to 100% teleworking eligibility through the pandemic. Where that's been eventful is not long ago, we had the cold shutdown and snow and everything else, shut down a number of our facilities on the East Coast and Texas and whatnot. Our CSRs could flip and immediately work from home. So some of the benefits coming out of COVID have been helpful. I think you're aware that when there are hurricanes and natural disasters, we flip a switch, and as many as 3,000 of our CSRs, we have about 15,000 individuals who answer the phones, CSRs, but as many as 3,000 go to work for FEMA to do intake for FEMA. And that's sort of the historic guns and butter type of a decision that needs to be made at the Internal Revenue Service. But when you look at answering the phones compared to intake for FEMA, people who may have lost their home, et cetera, the decision, I think, routinely and justifiably so goes to get our people on the phones for FEMA so that we can take care of that. And that creates hardship for the tax side of the house, the tax community, taxpayers, professionals. And it's, like I opened up is thanking you for your patience and understanding. This was not just a year, not to downplay the pandemic, but there were also numerous natural disasters. Up in Oregon, we sent, I think, almost 30 IRS criminal special agents to Oregon to do search and rescue and security for medical teams that were up there and whatnot. So the idea that IRS folks give back, I think, is huge, and that's gone on for a long time. The idea that when they're out in the communities that they identify as IRS in terms of giving back, I think is similarly, quite important, because we want people to know that this is not a brick and mortar agency. It's an agency of people who care. To the extent we cannot provide the services that you all deserve and that taxpayers deserve, by and large, it's funding and allocation, right? We have so many lanes, and over history, I think more often than not, folks have allocated IRS resources to the most visible aspects of the agency and either delayed funding other aspects or just sort of let them fly, under-resourced, if you will. And those are difficult decisions, right? My personal reaction is to let everybody know specifically where we're underfunded, and certain areas we cannot ignore. We do need to fund, even if they're non-visible. I think you're aware that we get about 1.6 billion cyber attacks per year. The activity increased somewhat this year. I think some foreign nation states might have thought that maybe the IRS was in a more vulnerable position this year compared to the past, given the pandemic and whatnot. But we have to be ever vigilant in those arenas. In COVID, I think we were among the leaders of federal agencies. I can tell you that personally, myself, and then the person that's in charge of COVID, who is also my chief of staff, Kevin McIver, interacted with 50 different tax administrations around the world to see what they were doing, how they were doing. We did a number of presentations where we were the lead agency explaining what we were doing. The People First initiative, that we did in March of last year went from concept to implementation in less than 5 days. What can we do to sort of suspend, delay, et cetera, things to make it better for people that we interact with. That was not perfect. That created some issues, I know, for many people on the outside. But again, the effort was there, and I think the desire was incredibly strong from that perspective, that we not compound situations for people. I do still read every tax case that comes out and get a lot of the tax journals and the rest of that. So still feel somewhat plugged in, if you will, to the communities. On the enforcement side of the house, I'm a believer that enforcement supports compliant taxpayers. First look is helping people in compliance, single syllable, easy, timely guidance, and in language where we can. I could sit here today, and I made a comment recently on some Senate testimony that I could have said, well, we were going to launch a big language initiative, but because of COVID, we delayed it. We needed to move resources around. And instead, my testimony was, the pride factor of launching the language initiative that we did last year. We're definitely not done with that. That's not, launch it and move on. You're going to see that continue. You're going to see similar services on that side continue. And I think that enforcement is the alternative approach to interacting with taxpayers. First, we try to help them get it right. And obviously the vast majority of folks want to get it right. And, how do we hold it on them if we haven't actually done our homework and been in their communities and outreach and such? A huge pitch, if you're thinking about coming to work for the government and specifically the IRS, this will be a great time. We will have, just by the numbers, we have about 52,000 IRS employees retiring over the course of the next 6 years. That's the net number. The average employee stays about 5 years beyond their retirement eligibility. So at a minimum, we need to replace 52,000 employees. And if you read, different versions of different people's versions of the legislation that's pending, you'll see that we're probably trying to bring on board somewhere, 20 to 30,000 more people beyond that. in the service area, in operations support, in modernization, as well as in enforcement. We could do better in every one of those lanes, but we need the funding, we need the training. We have trained our people on soft skills, our frontline people on soft skills, particularly during the pandemic. We've received almost 170 million phone calls during calendar year 2020 that comes back to basically, by and large, these 15 or so thousand people to answer the phones. Phone calls were coming in at the rate of about 1,500 per second at the peak. And, were we not prepared for that? I don't think anybody would be prepared for that. And everything we do is subject to approval. So IRS comes up with its budget numbers. And I read some commentary recently that's just flat out wrong, but IRS comes up with its numbers. They then get trimmed because we're part of a gross number for Treasury, which then gets trimmed through OMB, which then leaves the administration and goes up to the Hill. I would suggest that folks actually look at what IRS requests without implying that IRS requested something different. But, we're requesting the best that we can. And the basic answer I give all the time, on the Hill and otherwise is, out of every 10 calls, how many calls do you think we want to answer? And the answer is simple, it's 10. I mean, why would we not want to answer 10? We want to answer 10 and we want our people to be the best. I'll also say that the average call time has gone up considerably. It's about 19 minutes. This year, it was historically, it's about 11 minutes. And a big part, the difference in that, there's some is related to some changes in legislation and the reason that they call in. But by and large, most of the calls that our folks are receiving, once they conclude the issue they called for, whether it's tax or economic impact payment or advanced child tax credit, it flips into how the individual has been doing during the pandemic. And we get a lot of personal stories, and we're encouraging our employees to stay on the line and talk to the people, because for the most part, we are the agency that interacts with these with people on the outside. There's not a lot of other source, and a lot of people have been limited in their outreach because of the pandemic. So we're proud to have those contacts. We're proud to be in those lanes and try to help people where we can. From your perspective, the path forward, and I get it that I'm coming up pretty close to my time, but look to the agency. A lot's going to depend upon the legislation that's pending. I do think that we will get a significant increase in funding. I think that people will be proud about how we handle that and how we, as an agency, move forward with that. We are prepared. If the legislation comes, we're prepared to move forward almost instantly. Keep in mind that with the 3 rounds of economic impact payments, to the extent that we did get those payments out to people, the first round of payments went out within 2 weeks of enacted legislation. The second round went out within 48 hours of enacted legislation. And the third round went out within 24 hours of enacted legislation. Total EIP payments, a little over $800 billion. Couple that with more than $600 billion in refunds to individuals for filing season 20 and 21. The IRS employees were responsible for pushing more than $1.4 trillion out into the communities during the pandemic. And, we had to rebuild the IRS following shutting it down and learning how to work in a socially distanced and virtual environment. So the hardships that you had, we tried to limit and obviously not have them occur, but we do understand that those were out there, and we understand that we were not in contact with everybody. I think the agency will be served well by the relationships that were developed, these 18,000 different community organizations and other agencies, federal and state. And I think that's going to make the agency different going forward. Certainly give us the ability to interact more frontline with people who we can help. Look for the IRS to serve taxpayers in different ways moving forward. Look for expanded virtual service opportunities. Again, we'll continue the multilingual efforts. We've had a lot of interaction. Personally, I've had a lot of interaction with the Indian nations. And I think, to those of you who might be involved with the Indian nations located in the United States, you're going to see some positive impacts there. And, very proud to be part of a group of people, employees, if you will, but people who have the opportunity to help folks on the Indian nations. And, again, it's another concept of underserved communities. And, recall that IRS interacts with everyone. We interact with the most unsophisticated taxpayers who may not be able to interact in English, in broadband, et cetera, through to the most sophisticated individuals and corporate, type organizations on the planet. And so we do our best in every lane that we can. We will continue to listen to you. We'll continue to try to enhance the services. You are getting professionals are getting an online portal to interact with us. We got behind the curve on getting there through the pandemic, and we only had so many resources and so many people, and we inherited a lot of challenges, as I said. But in terms of e-signatures and such, and virtual options for the tax professional community, I think you'll see a few significant changes this year, but most of those will be delivered next year. And it's not without desire or effort. It's just, again, in a different level, guns and butter. We got to make decisions on priorities. Some of that will be impacted by funding considerations, depending upon what we get from the legislation. There's 3 critical pieces in this legislation, and we're hopeful for all of them. I will say that a significant amount of time, the administration, Treasury, and IRS leadership, myself and others, has been spent working with the Hill on this legislation, and each piece of this, getting an understanding of where we can do things better. And we're doing our job, and ultimately it's up to others, the members of Congress, to vote how they vote, and we're supportive of and we'll do the best with what we receive from them. In closing, a couple points. Look for, from the enforcement perspective, look for us to stay in the arenas that we've been in, offshore, conservation easements, micro captives and such. Those won't change. The non-filers, I think if Darren either already spoke or will speak, I'm certain he talked to you about the revenue officer compliance sweeps, in the non-filer world. To the extent you're in touch with the non-filers, or you can get in touch with non-filers, I think do what we all tried to do when we're on the outside, is get them back into compliance. It's always better to come into compliance on your own than to have a knock at the door that might be 2 folks that work for Darren who have a wealth of information. We have a lot of information. They don't just show up at the door as somebody who didn't file with an indication that they didn't file. All that groundwork is laid in advance before he sends people out on these on the rocks. So help that community. That's a community that without a doubt better get into compliance. I don't have a lot of sympathy for most of the people. I do understand that frequently somebody, and I'm not talking about the lower income levels, I'm talking about high income non-filers. I understand that often somebody stops filing a return because, a death, a business breakup, et cetera. Something knocks them off of the compliance rock. And then the second year, they're concerned because they didn't file for the first year, and whether they have, civil or criminal exposure, or the economic exposure that now they have 2 years worth of returns. But that doesn't get any better the longer they stay in non-compliance. So I would, ask the practitioner community to try to help, in particular that group, because we do have information, and we intend to maintain our focus in that arena. Partnerships, complex partnerships, tiered partnerships, interactions between partnerships and other types of organizations, foreign and domestic. If you're, on the controversy side, look at the documents carefully, because we're looking at the documents carefully. We're getting more and more expertise. We had a significant hiring of highly experienced folks in the partnership arena during this past year. We did not have, we got more than we were looking for, but that was because that's all that we could afford at that time. But look for us to continue to expand into the pass-through arenas for the high wealth groups significantly. Again, I want to know why there's multiple tiers for something, and I'm not unfamiliar, from the outside and what we've all seen. We need to get these things cleaned up, and sometimes it's not the horse and the jockey. I'll let y'all try to figure out what I mean by that. But look for us to stay in these arenas, and if we get additional funding, which will also enhance our systems to be able to look at these agreements and go through them. Hopefully y'all have done that before we get there, and always better to amend a return, than not, with competent tax counsel and the rest, obviously. So that's really where we are. Two very, very quick, and I'm closing, and I apologize, Ronnie, for going over a little bit. But among other things where I tell our employees to be proud, two very quick ones is a little more than a year ago, IRS took down the largest child exploitation site in history, 338 arrests in 38 countries, including the rescue of 23 actively exploited children. That activity occurred in the dark net. It was discovered, investigated, and moved by IRS CI Cybercrimes Unit. And I know you've got Jim Lee. Jim was this morning, so I know you got Jim. We are hugely proud of our IRS Cybercrimes Unit, and people are like, well, why is IRS involved in that type of activity, child exploitation, things that are in the dark net, things that are engaged with virtual currencies, we're going to be there. And then the second part, again, IRS Cybercrimes, is a takedown of 3 terrorism financing sites, Hamas, Al-Qaeda, and ISIS. And again, operating in the dark net, virtual currencies, and IRS CI Cybercrime Unit took that as well. I use that as a message. We are aggressively looking at virtual currency related issues, non-compliance in the virtual currency world. Look at the affidavits, look at the support that we've had with respect to the John Doe summonses, Coinbase, Circle, and Kraken. Take a look at the activity that we have there. Take a look at the 2019 return, the 2020 return. The question that is on there is a yes, no question, similar to the FBAR related question that's on Schedule B. You should anticipate when you see that type of activity, and you saw the letters that we sent out, that we are gathering and collecting information. Our systems are getting better at looking at the information we have and looking at the information we expect to get in the future. And again, I would call out to tax practitioners to have very straightforward, frank conversations with clients and others in this space. As we increase resources, we will increase resources in criminal investigation. And I think you'll also see an increase in resources for DOJ tax. And that's where our criminal referrals go. It makes no sense to just increase resources for IRS CI without a corresponding increase for DOJ tax. We don't want to create bottlenecks, and we don't want to be overly selective on the cases that we should be referring. But virtual currencies, the opportunity is now for people to get into compliance. And from day one, we've basically telegraphed what we're doing, where we're going. You should expect us to continue to do that. And Ronnie, apologize for going over, apologize to the folks after me for going over. And with that, I will turn it back to you.
Thank you so much, Commissioner. It was absolutely amazing. You're always such a treat to listen to. Thank you so much for gracing us with your presence today. And now I will hand over to a mic to our new dean at USD School of Law. Our dean, Dean Ferrillo, had resigned as our dean, and we couldn't be any happier to welcome Dean Shapiro to lead our great school. He has done an absolute amazing job since he began, making lots of changes, doing lots of big things, and it's an honor to have him introduce the Richard Carpenter Excellence in Tax Award to Nina Olson.
Thank you, Ronson. This is Debbie Ryder. It's my pleasure to introduce you to Robert Shapiro. Dean Shapiro joined USD School of Law in January 2021. Previously, he was the Dean of Emory University School of Law from 2012 to 2017, and the Asa Griggs Candler Professor of Law and co-director of Emory School of Law Center for Federalism and Intersystemic Governance. Before becoming Dean of Emory, he served as the Associate Vice Provost for Academic Affairs, Associate Dean of Faculty for the Law School, and Associate Faculty Director for Emory's Hale Institute for Global Learning. Dean Shapiro is an internationally recognized scholar of federalism. A graduate of Yale Law School, he served as the editor-in-chief of the Yale Law Journal. He clerked for Justice John Paul Stevens of the United States Supreme Court and for Judge Pierre N. Level of the United States District Court for the Southern District of New York. Welcome, Dean Shapiro.
Well, thanks so much. It's always quite an honor when the introducer is introduced. So it's a real pleasure. And, you know, one thing that I don't always put on my bio, which, let's see, are we good on sound? Okay. One thing that I don't always put on my bio is one of the reasons I knew that USD was the right place for me was that both of my parents were tax lawyers. But in any event, I would like to add my welcome to this, the 6th annual USD School of Law, RJS Law Tax Controversy Institute. We're very grateful for the support of our sponsors, and we're especially grateful for the ongoing leadership of Ronson, Shamoun, and RJS Law, who make all of this possible. I also want to express my personal thanks to Ronnie. Since I arrived at USD in January of this year, all of our alumni have been warm and welcoming, and Ronnie has been especially gracious. Now, the University of San Diego School of Law is recognized for the excellence of its faculty, the depth of its curriculum, and the strength of its clinical programs. One of the areas of special renown is our tax program. We are proud of our superb tax faculty, and our commitment to tax runs throughout the curriculum. That commitment begins with a requirement that all of our JD students take tax, and includes our top-ranked tax LLM program, as well as our tax diploma program and our federal tax clinic. And these and other ways, our outstanding tax program plays a starring role among our superb academic specialties. Now, a key component of our exceptional tax program is our distinguished adjunct faculty. And Richard Carpenter has long served as a shining exemplar of these skilled professionals. Richard Carpenter has been on our faculty for 25 years. He teaches both the tax court litigation class and the criminal tax fraud class. Richard has published more than a dozen articles, including some of the leading works on resolving civil and criminal tax disputes. In recognition of Richard's exemplary skill, commitment, and character, including his integrity and compassion, in 2017, USD established the Richard Carpenter Excellence in Tax Award. The award is presented annually to an individual who demonstrates outstanding dedication and expertise within the tax law field. The recipients have included the leading lights of the tax world. Last year, the award was given to Carr Ferguson, visiting professor at USD School of Law and former Assistant Attorney General in charge of the tax division in the United States Department of Justice. This year, we are very pleased to present the Carpenter Award to Nina Olson, Executive Director of the Center for Taxpayer Rights. The Center for Taxpayer Rights is a nonprofit organization that works to advance taxpayer rights in the United States and internationally. Among other initiatives, the center organizes and convenes the International Conference on Taxpayer Rights and operates the Low Income Taxpayer Clinic Support Center. From 2001 to 2019, Ms. Olson served as the National Taxpayer Advocate of the United States. In that position, she headed the Taxpayer Advocate Service, an independent organization within the Internal Revenue Service with some 2,000 employees and 90 offices across the United States, dedicated to assisting taxpayers in resolving their problems with the IRS and making administrative and legislative recommendations to mitigate those problems systemically. Ms. Olson has submitted dozens of reports to Congress and testified before congressional committees over 60 times. She has been a tireless advocate for the taxpayer. As she has written, while taxes are the lifeblood of government, it is the taxpayer who pays that lifeblood. Before serving as the National Taxpayer Advocate, Ms. Olson founded and directed the Community Tax Law Project, the first independent low-income taxpayer clinic in the United States. Ms. Olson has received many awards and recognitions, including several from the American Bar Association section of taxation, their Distinguished Service Award for Lifetime Service, Pro Bono Award, and Jules Ritholtz Memorial Merit Award. She also received the Tax Foundation's Public Sector Distinguished Service Award and Pro Bono Awards from the Virginia State Bar, the Virginia Bar Association, and the City of Richmond Bar Association. In 2016, she was recognized by tax analysts as one of the top 10 outstanding women in the world of tax. To this long list of honors, we now add the 2021 Richard Carpenter Excellence in Tax Award. Please join me in congratulating Nina Olson.
Well, thank you so much for this award. It was so unexpected, and I thank you so much, Dean Shapiro. Thank you, Ronson. Thank you, folks at USD. I love USD. The clinic there is an extraordinary clinic, and when I was the National Taxpayer Advocate, I so enjoyed meeting with the folks there and working with them, and just acknowledging their work. And for all of you on the session, I thought I would just speak for a few minutes, not stand between you and your next session, but to talk a little bit about both the work that the center has been doing recently and just some observations I have about the IRS. And I'll also keep an eye on the chat if anyone has some things that they want me to address. So I thought I would just talk a little bit about what the center had been doing since I retired as the National Taxpayer Advocate in July 2019. So that's been on July 31st. So we're almost 2 years out. And on August 1st, 2019, I started as the Executive Director of the Center for Taxpayer Rights, which meant I just continued to sit in my kitchen where I am today and cause trouble. I didn't realize that some of the trouble that we've been causing would occur in the context of the COVID, the economic impact payments. But the center had really early on, it helped us pull together the clinics. We now have a weekly strategy call with the low-income taxpayer clinics. We're trying to get them to think as a nationwide law firm, if you will. So when there are issues coming up, that they can have a coordinated litigation strategy and work in every circuit and bring cases together in a way so that we're not working against one another or haphazardly or ad hoc. And we really saw that in the context of the economic impact payments. The center provided a lot of support in the Magruder case, which was the case pertaining to Social Security recipients who were unable to enter their dependent information in the non-filer portal. They were given less than 40 hours to enter their dependent information. And then if they missed that 40 hours in the midst of a COVID and not being able to have their support systems at all to assist them in doing something online that was not mobile ready, then they were told by the IRS and Treasury that they had to wait until 2021 to get the rest of the payment in the middle of a COVID, crisis. And the litigation was very successful, although we never were able, the Magruder case never went literally to trial. It was settled on the courthouse floor, if you will, right before the major hearing before the judge who had found it very, very interesting issue. We had a major win in Shoal. The center worked very closely and filed an amicus brief in the Shoal case, which dealt with economic impact payments to incarcerated persons, and Leif Cabraser out in California brought the class action. And if you have not read the Shoal opinion from the District Court of Northern California, I really recommend you do, because it really takes a look at the Administrative Procedure Act and what constitutes final agency action. And the judge found that the FAQ that the IRS acted upon in denying incarcerated persons the economic impact payment actually constituted final agency action, and therefore based on that, was able to rule that it was arbitrary and capricious without any basis in law. That's a stunning opinion to get. And it was, of course, followed in a case at the United States Supreme Court in which the center filed an amicus brief working with the Harvard Tax Clinic, in which the Supreme Court followed our recommendations. Yay! So we sort of think this has been a good year for the center. Notwithstanding all that, we have been doing a lot on the LITC Support Center, and that our website for the LIT Support Center, the center's website is one, and then there will be a support center website, which really will be like the National Consumer Law Center or the National Center on Women in the National Women's Law Center, providing support to the LITCs. And we are currently right now in the development and programming phase of creating something called LITC Connect, which will be a nationwide ability to have clinics come in and make a request for pro bono assistance. And then attorneys and CPAs and enrolled agents can sign up, create their own little profile. I like to call this a dating app for the clinics and the LITC and the volunteers. And it's very sophisticated, and we will then do matching, and our pro bono coordinator will reach out to the volunteer and try to make the appropriate match. And we also plan to provide training and everything. And I'll be reaching out to all of you to get you to sign up so that we can really bring volunteers into communities that don't have a large number of tax lawyers, and a large pro bono referral panel, so that we can really help the smaller clinics get larger matches through their in-kind donation of services. So that's a little bit about the clinic. The center, and also we've done our international conference, and we have a new one coming up in October that was supposed to be in South Africa, but because of COVID now, we're going to be online on October 6th, 7th, and 8th. So we hope to see you there. I want to talk just for like 5 minutes about the IRS and where I see the IRS. I had the privilege of being in the senior leadership of the IRS at the highest levels of the IRS for 18 years. And I think that the IRS has done an incredible job getting through COVID, but I don't want to overlook the challenges that the IRS is facing. And I am thrilled that the administration is supporting additional funding for the IRS, but funding is not going to do it if we do not have transformation. And I really mean transformation. And it's not just thinking about digital services to taxpayers. It's thinking about how you do tax administration differently in the 21st century. And I will be watching really closely to see how the IRS applies the funding that it gets. Is it just going to do more audits of the same old, or is it going to be sophisticated in its use of information and data and get not have so many, no change rate audits, that it uses data in a proactive way to identify taxpayers who are at risk of economic hardship, so it doesn't do terrible things to them that it has to unwind. I really need to see those things. One of the things that the center has partnered with the World Bank and HMRC, Her Majesty's Revenue and Customs, and VIA University in Denmark, and the University of Antwerp Digitax unit. We have been putting together a lecture series from people and tax agencies around the world about using data and also protecting taxpayer rights and protecting human rights in the context of artificial intelligence and avoiding bias and getting transparency in the use of data. And I am not, I am very impressed with some of the things that are going on in the rest of the world, but I am very much watching closely to see that the IRS protect taxpayer rights from the start in its use of data, and understand that data can be incredibly biased. And in fact, because of the way it's collected data, many of its data sets are incredibly biased because of the way that it has done audits and enforcement activity in the past. And so if that's its data set, it's missing much richer information. These are all solvable. These are all able to be addressed, but it means a transformation about the way the IRS does things. The final thing I sort of wanted to address was a comment that the commissioner made, because you know me, I don't just sit there and take offside comments. The commissioner mentioned, I think, referenced a blog that I wrote, I guess earlier in this week, talking about looking at the numbers that Erin Collins, the National Taxpayer Advocate, had published in her filing season review in her June report to Congress. And I made some, I recited some of those numbers and made some recommendations that the IRS needed to do to address them. And at the end, I sort of mentioned that, one thing that the commissioner is very, likes to say in his testimony is that, and I think the point he's trying to make is that, the level of service on the phone is funded at this rate. And he points out that, Congress had funded the level of service on the phone at 60%. And the point that I was trying to make was, if you go back to the president's budget for that year, fiscal year 2021, the president asked for funding of taxpayer service level of service on the phone at 60%. So Congress funded 100% of what the president asked for. Now, it's interesting because when I wrote that, I heard from several former commissioners who all said, thank you for writing that. It is one of the most frustrating things in their jobs has been the budget procedure and the passback, and I have sat through 18 years of this at the highest levels, where all of the heads of the organization get together and put together their proposed budget initiatives. And that's rolled up. Now, we all vet one another's, and so some even within the IRS hit the cutting room floor. But then it goes over to Treasury, and Treasury looks at it, and even more things hit the cutting room floor. And then that's passed back to the IRS, and then the IRS with instructions, and the IRS folks cut it even some more, and then that goes to Treasury, and they cut it some more, and then it goes to OMB, and then OMB sends it back to Treasury, and then IRS tells Treasury tells IRS what's even more passed back. And in the middle of that, that's how you get a 60% president budget request, a level of service. And that was my point in that discussion, was that if you're looking at Congress, for the last few years, Congress has funded between 97 to 100% of the president's request for taxpayer service. And the issue is, what is the request going over? And that's not for the IRS not trying to get more funding, but the process that I was describing was what happens inside these buildings before anything sees the light of day. And my point there was, let us make this more transparent, and let us really say, what is the level, what will it take to get 85% level of service on the phones? And let's do the hiring and the staffing to figure that out. And if anybody thinks that the phone calls are going to lessen for next filing season, when we have the advanced child tax credit going out today, well, I have a bridge to sell you, because you're going to see the same volume of calls, and we need to be prepared for that. So I'll stop there. Any observations by the parent on the 10 collapsing into 6 or 7? I would say, no, you should not do that. Those 10 rights that I recommended were based on an OECD report that really tracked sort of the fundamental rights of taxpayers. And if you look at those 10 rights, they also track how a taxpayer moves through the tax system and the tax controversy process. I don't think we have seen the end of litigation on the Taxpayer Bill of Rights. I am working right now on an article about the annotated version of the Taxpayer Bill of Rights, which is my personal history on the development of the Taxpayer Bill of Rights. And I think, that maybe will provide some path for people to really think through this in the context of not just litigation, but in the context of analyzing procedures and approaches to problems and processes in the IRS, so that you don't need to litigate, because you have analyzed what you are proposing to do in the context of each one of those rights. Are you informing taxpayers of what is expected of them? That is fundamental due process. Notice and the opportunity to be heard. Okay, that's where I am on this collapse.
Well, thank you so much, Ms. Olson. You really honor us by our ability to give you this award. And we are so honored and appreciative of your tireless advocacy on behalf of taxpayers, which has done so much to strengthen the Internal Revenue Service and our system of taxation. So thank you so much for that.
Well, thank you. And thank you, Richard Carpenter, for all your work.
And now I am honored to introduce our keynote speaker, Judge Elizabeth Ann Copeland of the United States Tax Court. A native of Colorado, Judge Copeland received her undergraduate and law degrees from the University of Texas. Prior to attending law school, she worked at the predecessor to Ernst & Young and became a certified public accountant. While attending law school, she received the Fulbright and Jaworski Outstanding Second-Year Law Student Award. In addition, she served as a law clerk to Justice Cook of the Texas Supreme Court. Judge Copeland began her legal career appropriately, one might say prophetically, as an attorney advisor to Judge Mary Ann Cohen at the United States Tax Court. Judge Copeland practiced law with Oppenheimer, Blend, Harrison, and Tate and its successor firms, and also served as an adjunct professor at Our Lady of the Lake University. Judge Copeland has served the profession in many ways, including serving as chair of the State Bar of Texas Tax Section. As a member of the Texas State Bar, she recognized the need to assist unrepresented taxpayers, most of whom could not afford legal counsel, with the presentation of their cases in tax court. Answering this call, she succeeded in establishing an all-volunteer pro bono assistance program, which continues to thrive. Among Judge Copeland's many notable recognitions, the American Bar Association section on taxation awarded her the Janet Sprague's Pro Bono Award in 2009. Tax analysts named her a 2012 Tax Person of the Year in its national edition of Tax Notes, and she was named San Antonio Tax Lawyer of the Year in 2011, 2017, and 2018. In an age of partisan division, it is a pleasure to note that Judge Copeland was nominated to the United States Tax Court by President Obama, and that nomination was reaffirmed by President Trump. Following confirmation by the Senate, Judge Copeland assumed her judgeship on October 12, 2018. We are most honored by her attendance here today. Please join me in welcoming our keynote speaker, Judge Elizabeth Ann Copeland.
Thank you so much, Mr. Shapiro. I appreciate it, and congratulations on your new position. Welcome, everybody. I am Judge Elizabeth Copeland. I've been at the tax court now for about 2.5 years. Before that, I practiced for over 25 years in the tax controversy arena, assisting taxpayers of all makes and kinds. And so I have a great appreciation for the practitioners out there, and I encourage any of the law students that are on this call also to continue your passion for tax and pursue that career. I titled this presentation, The Good, the Bad, and the Ugly in Tax Court Trials, because last year, the Honorable Judge Toro spoke to you about the overview of the tax court, and not to repeat anything he said. I thought, wow, this is a COVID year. This is a big change. We've had a move to remote trial proceedings from our in-person proceedings. And wouldn't it be nice to have a compare and contrast of those two types of tax court proceedings, just to let you know where the tax court's been and how we got here and how it's all working. So I will tell you that in my 2.5 years, I've had 13 in-person calendar calls with trials, and I had 3 canceled sessions due to COVID-19, and I've had 5 remote Zoom Gov calendar call sessions with trials. So I feel like I have a decent amount of experience to compare the two and talk to you about it and contrast that. I'm going to attempt to share my screen so I can show you the cute little PowerPoint that some of my law clerks helped me put together and get us through this part of the presentation. So hopefully this works pretty effortlessly. There it is. And let's see if we can start from the beginning. Perfect, it worked. All right, so today I'm going to talk to you about the good, the bad, and the ugly in tax court trials, and I thought I'd start with the ugly, which had some good to it as well. So enjoy this little snippet.
Mr. Clinton, I believe you have a filter turned on in the video settings. You might want to
can you hear me, Judge?
I can hear you. I think it's a filter.
It is, and I don't know how to remove it. I've got my assistant here. She's trying to, but I'm prepared to go forward with it. I'm here live. I'm not a cat.
I can see that. I think if you click the up arrow next to the
The point of that video.
Your screen is not shared.
My screen is not shared. Okay, I'm gonna have to do this real quick.
So the share screen green button at the bottom.
Did it not work? The cat video? Let me ask this, did anybody see the cat video?
We heard the audio.
Only heard the audio, okay. Okay, let's try share.
There we go. Okay, we can see I can see your slide deck. If you want to go ahead and start it, then you should be good.
Okay, for some reason. Okay, let's hope you can see this.
Yes.
Can you see it now?
Absolutely.
Okay, we'll replay that a little bit. I'll cut it off a little short since you heard the video, but sorry about that. This is what happens when we do remote trial settings. Sometimes the video doesn't work.
I believe you have a filter turned on in the video settings. You might want to.
Did you hear me, Judge?
I can hear you. I think it's a filter.
It is, and I don't know how to remove it. I've got my assistant here. She's trying to, but I'm prepared to go forward with it. I'm here live. I'm not a cat.
I just wanted to share that little video to show you what could happen in trial setting. I'm sure almost everybody on this call has seen it before. There are things that can happen, as just happened in this presentation where I didn't properly share my screen. So that would be the ugly, but I have to say there was a lot of good in that video. If you will notice, the parties, the judge was very patient. The very distinguished Mr. Ron Ponton was ready to go forward regardless of his video problems. And so it just lets you show that the Zoom trials, the one big takeaway is you need to have some flexibility for dealing with issues that come up during trial and attempts to resolve them. The judges at the court have had numerous issues. I've been fairly lucky. I have not had a huge problem with any of my Zoom trials, other than with the public access through the YouTube video, which I'll talk to you about later. But there have been judges that have had to reschedule trials to later in the week because of video problems or internet problems and things of that nature. And you just have to go with the flow a little, just like Judge Ferguson did in this little video from Texas. Okay. As a way of background, Judge Torrey talked to you a little bit about our tax court, but I just wanted to point out a few things that are kind of interesting, and these are interesting both in a virtual setting as well as a regular setting, and that is that close to 96% 6% of all federal tax deficiency cases are actually filed in the United States Tax Court rather than the U.S. District Court or the U.S. Court of Federal Claims. We have 19 presidentially appointed judges, 17 of which are currently sitting. We also have 10 senior judges, 4 special trial judges, and each judge has about 2 law clerks per. The reason I like this little chart is because it shows you that what happens is we have a small claims division. That's not separate. I know it looks separate and apart from our court, but it's a part of our court. We have special trial judges that hear cases where the amount in controversy is less than $50,000 and the taxpayers have elected a small case procedure. It's a more informal trial. It's still part of the same tax court that operates throughout the country. And there are regular tax court judges such as myself that handle small case sessions as well, and small cases where the cases have been designated as for small case opinions. What is really interesting about this chart is, though, that many people don't realize the tax court, the decisions of the tax court are appealable to the U.S. Courts of Appeals. So in California, that'd be the Ninth Circuit Court of Appeals, and then on to the Supreme Court. I thought I'd just mention that the most recent case I can think of that's gone all the way up to the Supreme Court is one called PPL Corporation and Subsidiaries versus Commissioner. In that case, it was a case by Judge Halpern. The tax court held for the taxpayer on a foreign tax credit issue. The Third Circuit reversed, and then the Supreme Court reversed the Third Circuit and upheld the tax court's opinion. So our cases can make their way all the way up to the Supreme Court. Right now, there are 2 cases with a writ of certiorari that are waiting to be determined to see whether the Supreme Court's going to take them. One has to do with our jurisdiction, which is really interesting. And that case is called Fleischer versus Commissioner. And basically, the taxpayers are arguing that in a CDP context, if their notice of determination is issued, they have 30 days to petition the tax court. But they are, in fact, arguing that that jurisdiction is not statutory, but that you can use equitable tolling, and if there's a reasonable cause, the tax court still has jurisdiction to hear the case. So that's going to be an interesting case if the Supreme Court takes it on. And then there's another Indian treaty type case that's pending with a writ before the Supreme Court. The most recent tax case was not a U.S. tax court case that's been before the Supreme Court, and the writ of certiorari got denied in a cannabis case where Justice Clarence Thomas actually wrote a statement on the writ of denial, and that case is called Standing Akimbo, LLC. Again, it's a cannabis case involving a summons issue, but ultimately the IRS is looking for information on the income from that entity, and most of the cannabis cases that come before the United States Tax Court have to do with Section 280E, which disallows all of those businesses ordinary deductions. So I just thought it'd be kind of fun to talk about that. Here's a big change from virtual to in-person. In the past, we were mandated by Congress to travel to taxpayers for the convenience of the taxpayers and to provide a consistent tax law throughout the United States. So we would travel to 73 cities, and 15 of those 73 were designated for small cases only. In California, the tax court sits in San Francisco, Los Angeles, and San Diego. And then Fresno is your small case designation. So there's four locations that the tax court comes and travels in person when we do trials in person. Those are the same cities that we do by Zoom. Anytime we have a Zoom calendar, it's designated for cases that are coming from those cities, and they're accumulated. I'm going to talk about this a little more in the slide presentation, but they're accumulated so that we can deal with cases all in the same time zone, more or less. And again, I'm gonna have some more information on those type of cases, because there is a big difference between the Zoom trials and the in-person trials. So again, the court issued Administrative Order 2020-02, which imposed the travel restrictions due to COVID-19. And then we had a very intense study group look at all the various ways that we could continue to serve taxpayers remotely. We ultimately decided to institute Zoom Gov trials. And so trial sessions are set virtually. And in the cities you just saw on the screen throughout the United States. And now we are currently conducting virtual trials as opposed to in person. There are very good things about virtual trials, particularly when the parties are needing a little more time to resolve their case. So when we had in-person trials, the choice of a party that needed more time when they were already set on a trial session was that they could be moved to a different trial session with a different judge, or they could have their case continued generally. And if the case was continued generally, it could be as much as a year in some places, not so bad in California, but in other places throughout the United States, the tax court doesn't come that often. And so it would be an extremely long delay. With Zoom trials, we have the flexibility of moving cases, say in San Diego, that need a little more time to resolve their case to, say, a Houston, Texas virtual calendar, and we can try the case virtually almost any time and anywhere. So the Zoom did create a great deal of flexibility for participants if they're needed, if there were scheduling conflicts or additional time was needed by the parties to prepare for trial. The difficulty with Zoom trials, which is going to come out, you'll hear this continuously, is in cases that have a large volume of exhibits, large substantiation cases, things of that nature. It is cumbersome to go through the exhibits, pulling them up one at a time on the screen while conducting the trial. So there's also problems with low-income taxpayers that don't have access to technology. The court realizes that. We try to work around that. We try to help them in any way we can, accommodate those situations, but that is a reality. There are some low-income taxpayer clinics throughout the country that actually provide, they allow a taxpayer to come to their facility and use their computer equipment to conduct their US tax court trial. I think that's to be applauded. It's an amazing service that is given to low-income taxpayers, but that's the reality of a Zoom trial. They have the bad and the ugly is just dealing with the large number of exhibits and the problems with technology. So our trial calendars set for any city, you can get 125 to 150 cases put on a trial calendar. That whittles down over time as cases settle or need to be continued, or a variety of reasons. It may be only 15 to 20 cases that are called at a calendar call. And for, I'm assuming most of you know what the tax court calendar calls are, but just in case you don't, the way it works is those 150 cases are all set for trial on the same day at the same time at 10 a.m. start time, always. And the cases that remain are called that morning by the trial clerk, and the judge listens to the status of the case and then sets them for trial either that day or during the week the session is scheduled. So that's the way that our calendar calls work. I will say with the Zoom, the different, and those work the same way in person. We had a calendar call. People would have to show up and they stand up and be recognized and tell the court the status of their case, and then the case would be set for trial. It's done by Zoom now, and until we go back in person, which we're all keeping our fingers crossed as soon. But It's being done on Zoom, on the Zoom format. And because it's Zoom, there's some challenges with it, particularly with the calendar calls. We need the tax court to be open to the public, but if we were to allow the entire public that wanted to see our calendar call on the screen, you'd barely be able to see the taxpayers and the respondents' representatives, the IRS counsel. So we had to come up with a way to provide public access to our court proceedings, and it was determined that we would use an audio YouTube feed to do so. So if you go to the tax court website, there is a place where you can click on trial sessions, and there's a link that talks about the trial sessions for that week and the upcoming trial sessions, and the day of the trial and the time of the calendar call. You can click on that and you can listen in on any tax court remote proceeding that's being performed anywhere throughout the United States. What that has done is kind of opened up the, especially for the clinics and for students, open up the ability to actually see hear how the tax court works. It's been hugely beneficial to clinics that operate in cities where the tax court does not come very often. And that is a YouTube channel that we have set up. I will not lie, the ugly with that is there have been problems with YouTube, and we've tried to work around them as well, and we're doing the best we can. The other ugly with the virtual sessions is it puts a lot of pressure on the trial clerk, that the person who's charged with helping the judge run the calendar smoothly. They have to set up all the breakout rooms. They have to name all the parties. They have to make sure that the LATC and calendar call, State Bar calendar call program volunteer attorneys that are there to help pro se taxpayers are identified and are able to connect with one another. And then they have to deal with phone-in callers, which are an issue for the court as well. So it's a lot of work for our trial clerks, and they have really stepped up to the plate. It's actually much more difficult for them to run a Zoom trial than it is to run a in-person trial. It's not nearly as cumbersome for the judge, but it really is for the trial clerks. The judges have had to change their opening statement just to address all the issues, the muting of the microphones and the making sure that the parties understand this is still a court of law, and you have to have the proper decorum in dealing with a court of law. So those are some challenges at our trial calendars. So just mention that. What has not changed is the types of cases. We still hear deficiency cases are a large portion of our workload. Deficiency cases, CDP cases, collection due process cases, innocent spouse relief requests under Section 6015, passport cases, whistleblower cases, you name it, partnership matters. That's all still there, even in the virtual setting. And again, in the virtual setting, you have the large volume of exhibit problems, as with the regular. That's even a problem in regular trials, but it's more so in a virtual trial. I will tell you, I had a very interesting case on my Dallas calendar that involved a taxpayer and 4 witnesses, none of whom spoke English. And so we were able to, they secured an interpreter, and the interpreter was available on the Zoom call, and the taxpayer represented themselves quite brilliantly, and the interpreter was terrific. So I know Commissioner Reddick was speaking earlier about the issues of language. We have the same issues come before us in the tax court when we're trying to conduct our trials, and we have English as a second language petitioners appearing before us. So next slide is talking about what governs our rules. Zoom trials or regular trials, the tax court rules of practice and procedure are the first place to go if you have a question about motions or what types of how to file things, what types of motions you make, any sort of rule that needs to be addressed. And if it's not addressed in the tax court rules of practice and procedure, we defer to the federal rules of evidence. I'm going to talk a lot in a second about our different deadlines in virtual trials. And again, I've already talked about the YouTube feed and the issues with that. So this nice little chart shows you some of the differences between an in-person trial and a virtual trial. So in our in-person trials, we routinely receive stipulated decisions at the calendar call the day of trial. We're now asking for them 21 days before the first day of trial. I can guarantee you that no judge is going to turn away a stipulated decision in a case if you don't meet that 21-day deadline. But that's now it's encouraged to get the parties to get to the table and make, if they're going to have a basis for settlement, to get it done earlier. The stipulation of facts used to be lodged at the trial at the calendar call session, and now we're asking for those 14 days before the first day of trial. The reason that this is a huge improvement because your judge has time to be more informed about the case when the stipulation of facts come in so early. And it allows for conference calls on sticky matters, and it really does make the trial go much more smoothly. The same is true for exhibits that are going to be used during trial. Now they have to be lodged electronically 14 days before trial. These are the unagreed exhibits that you can't stipulate to in the stipulation of facts. Again, very helpful to the judge to know that there's a disagreement over those exhibits and able to look at it before we show up at the trial session. The pretrial memo used to be due in regular cases 14 days before trial, and in small cases 7 days before trial, and now it's 21 days for both proceedings. Again, it's a huge help to the court to have those earlier. It helps with resolving issues before the trial and setting up conference calls and things of that nature. But it is further out from the start of trial than it used to be. Motions to dismiss, especially motions to dismiss for lack of prosecution, are supposed to be filed 21 days before the start of the trial. The same is true, the court actually sends out a standing pretrial order with all of these deadlines, so you will know what your deadlines are. But these are different, and it really gives us an opportunity to try to get the taxpayers who have not been participating in the preparation of their case for trial on the phone to make them understand the severity of the situation. Some of the judges do these pretrial conferences by Zoom, and some of them do them by conference call. So you could end up seeing either one, but it does. It also allows the court to encourage unrepresented taxpayers to maybe seek assistance of the low-income taxpayer clinics and the letting them know that the calendar call programs are going to be at the trial session in advance of trial. So there can be, it's very difficult on the low-income taxpayer clinics that are trying to help unrepresented taxpayers, as well as the calendar call volunteers, to the day of trial, meeting with the taxpayer for the first time and getting through the documents and trying to prepare immediately to turn around and have a trial in the case. So when those motions to dismiss are filed in advance, we have a little bit of time to encourage taxpayers to seek out help if they're otherwise unrepresented. And finally, in lieu of a pretrial memo, if a case looks like it's going to settle, the parties can just file a status report, and we ask for those 21 days before trial as well. So those are big changes to timing. I'm just going to skip through this slide. These are just the rules that govern what expert witnesses, their written reports or their direct testimony. Obviously, the credibility of an expert is very important to the court. In some cases, we can't, in person, we got their whole body language, but at least on Zoom, you do have very close view of the expert's face, and you do your best to try to judge credibility based on that. This actually goes for any witness. The huge good in virtual trials for expert witnesses is they can be more accessible because they can attend from virtually anywhere, and they have been very respectful of the decorum of the court in their settings when they show up for trial. The huge benefit for the taxpayers is it's less expensive to have an expert testify on Zoom than to fly them to the court session and pay for the hotel and flights and meals and all that goes with that. So there's less travel time, and that is a good of virtual trials. The other thing on expert witnesses that it can be cumbersome if there are a lot of exhibits and the experts being asked about pages of exhibits. It's often helpful if there's a person, an assistant, or the attorney handling the exhibits and flipping through them, because asking the tax court's trial clerks to do that slows down the trials, and it's a little more cumbersome. We always warn parties, both witnesses, expert witnesses and otherwise, that they're really not supposed to be consulting notes or outside persons, text messages, things of that nature, because we are just looking for their testimony, and they're not supposed to be using other aids that are not available to all the parties. Again, our virtual trials are on zoom.gov. I'm running a little over, so I'm gonna hurry up. The big thing with the virtual trials, I mentioned the difficulty with the trial clerks. I will say the way that parties can confer outside the hearing of the court, hearing of the judge, is they go into breakout rooms. And those breakout rooms sometimes cause problems with the parties getting back into the main session. And they definitely cause problems with a taxpayer who is only able to participate in their trial by phone, because once put in a breakout room, they have to hang up and call back into the session. So that's the ugly of the virtual trials. So again, there's always the good, bad, and the ugly. I've already mentioned the earlier pretrial deadlines. This next item is huge. We have now put in place in the court a procedure for returning subpoenas. So before it had to be at an active trial session, which often delayed trials. Now the court is having Zoom subpoena hearings pretty much every month with a special trial judge conducting them. So if parties need to issue a subpoena and receive documents, they can do it well in advance of trial by asking the judge to put them on a particular subpoena hearing calendar that's been set, and it really is making a huge difference. Most banks won't turn over records unless they have a subpoena, and they're glad to do it once they do. They, generally speaking, will provide the documents in advance of the hearing. So the parties just file a status report at that point, letting the court know the hearing is no longer necessary, but that they were able to get their documents. So that's a huge benefit of virtual trial experience. Again, individuals who dial in by phone pose problems, especially when breakout rooms are needed, especially if there's credibility issues. If there's a fraud type case, it's almost impossible to do that over the phone. And there's issues in virtual trials with access to technology. And that being said, we have noticed, or I have noticed, this is my personal observation, that in particular, as to the motions to dismiss for lack of prosecution, we have many more taxpayers show up to virtual trial sessions than we had to in-person sessions. So it seems to be an access issue. People maybe couldn't get off work, but they can definitely run to a quiet area and get on a computer and participate for an hour or so in a tax court trial. They had travel restrictions where they had to drive 4 and 5 hours to get to the courthouse, whereas now they can just admit themselves electronically. So there are some huge benefits to the virtual nature of the cases that we've been seeing now. The courts definitely prefer the in-person. I'm gonna, in the interest of time, I'm gonna skip my little video. Most of you have heard about the Supreme Court case where a justice kept his microphone on and went to the bathroom. I am
discussing and addressing the content of the calls that issue.
Oh, I didn't mean to show that one. And then the other thing is, this kind of goes for the decorum of the court. We ask that the parties dress accordingly, just like they would if they show up in the courtroom. And you know, if the only place to do the trial is in your bedroom, make your bed. There's just certain things about it, and you're not supposed to be getting up and going and washing dishes in the middle of your trial and other things like that. So I liked this little video. I'm not going to have time to show it, but it's basically a surgeon doing surgery that showed up for his traffic violation, and the judge didn't allow him to continue in that manner quite appropriately.
Well, today on Morning Buzz, we're talking about
again. I'm passing over that one. Virtual trials have been good and bad for the pro bono clinics that assist the court with unrepresented taxpayers, in that more of them can show up virtually than can in an in-person setting because of timing, travel restrictions, other things. One of the biggest difficulties that we have is that in the past, in our in-person trials, we would remind people of the clinic's availability 3 times: when the petition was filed, when the notice of trial was mailed, and then 30 days before the trial session was scheduled. Because we compressed the time between scheduling virtual trials and when they actually happen from 5 months to 3 months, they stopped sending the 30-day notice before the trial session is scheduled, and that's probably going to come back because it was really beneficial to inform taxpayers. It would also it also lets them know that the clinics are available before the calendar call. So most of the clinics show up early. They show up early on the Zoom trials. In all of my Zoom proceedings, the clinics have been there at least at 9 o'clock for a 10 o'clock calendar call, and the trial clerk has been able to put unrepresented taxpayers in breakout rooms before the calendar call to try to talk to the clinics a little bit about their case before the calendar call even happens, and I think that's been huge. Again, I mentioned some of these already. We've got the breakout rooms, and we have them available as best we can. We're trying to accommodate access to justice and the right result getting done. I'll just mention that the tax court's website has several videos of sample trial sessions, sample calendar calls, other things of that nature. And I encourage you to go to the ustaxcourt.gov website and take a look at all those, because they're very, very helpful. I'm afraid I don't have time for questions. I'm going to stop sharing my screen and take a quick look here, if I can get my video back. There we go. I'll take a look. I'll stay on for a little bit and take a look at the Q&As and see if I can't answer them in the chat box. If there's ones relevant to my presentation.
Wonderful. Thank you so much, Judge Copeland. That was very, very informative. I'll end with one quick question. When will it just all be back to normal? We're all just coming in and no more Zoom.
Not soon enough. We're working on it, as the most I can tell you.
Well, wonderful. Thank you again for your time. Your presentation was amazing. We appreciate all that you do for our tax court. So thank you. And now I would like to introduce our last and final panel. I'll hand over the mic to Sandra Brown to take it from here. Thank you, Sandra.
Thank you, Ronnie. I appreciate it. And thank you to USD as well as your law firm, RSJ, for obviously inviting all of us. What a great program, Ronnie. You know, starting out with criminal and civil compliance, and obviously our commissioner is always interesting. But I have to say, I learned a ton from Judge Copeland right now. So I'm actually on calendar for a Zoom trial around Christmas time. So it may be worth, you know, checking that out. But very good tips, so appreciate it. So for anyone who I have not met who's in attendance, and I know we have a robust attendance, 400 you know, participants who signed up today, so that's fantastic. But my name is Sandra Brown. I'm a partner with the law firm Hochman, Falcon, Tosher, and Perez. And before entering private practice, I was the acting U.S. attorney in the Central District of California and spent about 25 years as a AUSA handling civil and criminal tax matters. So I do want to take a few minutes here to introduce my panelists, in particular our two government speakers in perhaps more of a robust manner than our time might allow us, because we obviously are running over, but we're still going to, you know, make sure we use all of our time for this presentation. I think it's helpful to see both Rick Hasselbrock and Damon Rowe's background. It gives you some insight into, I think, their comments today, as well as, you know, how they have gotten to their current positions and their outlooks in regards to what their current roles are. So we have with us Rick Hasselbrock. Rick is a senior counsel attorney with the Small Business Self-Employed Division of the Office of Chief Counsel in the IRS, and is working out of the Cincinnati, Ohio office. Rick is actually one of 4 chief counsel attorneys, including the National Fraud Counsel, Carolyn Schenk, who some of you may have had the pleasure of hearing her speak, particularly over the last year when she obtained this new position. But they are specifically assigned to provide legal advice to the Office of Fraud Enforcement. And that's been a role that was created, as I noted, in the past year. And I know Rick's going to talk about it, but, you know, when I was in AUSA, I can say I often thought about the benefit of having a counsel attorney kind of at the ground floor, working with the civil side of exam or collection, and really giving some input in regards to the rules of evidence and what might make you know, a really good case on different levels with regards to what, you know, the exam units and collection we're pursuing. So Rick and his team, and Carolyn, obviously, as his leader, you know, bring that, you know, to the Office of Fraud Enforcement. Rick has actually tried more than 60 cases in the U.S. Tax Court, including cases involving civil fraud penalties, large abuse of tax shelters, estate and gift tax, and has more than 40 published tax court opinions. So clearly he's the right man for the job to join that team. Then we have with us Damon Rowe. Damon is the Executive Director of the Office of Fraud Enforcement for the IRS. And in that position, Damon provides IRS service-wide leadership, guidance related to the development and delivery of major activities in support of the IRS's efforts to deter and detect fraud. Damon also acts as the principal advisor and consultant to the various IRS commissioners, deputy commissioners, and different components with regard to enforcement strategic plans, programs, and policy. So Damon actually began his career with the IRS Criminal Investigation Division as a special assistant in Los Angeles. Obviously our old stomping grounds. Damon and I worked together there in Los Angeles. Damon has moved his way all the way up though. I'm hearing myself echo, so I'm hoping the audience isn't. With regards to becoming a senior analyst in the narcotics counterterrorism section, a supervisory special agent in the Dallas field office, an assistant special agent in charge in the New Orleans field office, excuse me, in the, and then back again to being a special agent in charge in Dallas before he returned to LA as a special agent in charge in 2017. Prior to his current position, he was the executive director of international operations for IRS CI in the headquarters. Damon also has not only a bachelor's degree in accounting, but his law degree from the Texas Southern University and a master's in tax from the Southern Methodist University. So a trifecta attack there in regards to his new role. That I think now it's been about a year, so you're pretty seasoned here in this, Damon. And joining our panel also two esteemed practitioners. First, Marty Shanebaum, affectionately known to many of us as the tax warrior. Marty is a former assistant U.S. attorney in the tax division from the Northern District of California, as well as a former IRS regional counsel attorney. Marty has his LLM in taxation from NYU. And Marty is the recipient of not only the ABA Ritz-Holtz Award for outstanding representation in civil and criminal cases, but also the State Bar of California's Joanne Garvey Award for distinguished legal career. Last and certainly not least, particularly since he's my managing partner, Steve Tosher of the law firm Hockman, Falcon, Tosher and Perez. You know, Steve is no stranger to USD, you know, Insitute, and so we're pleased that he was able to join our panel today. Steve is a certified tax specialist. He's a fellow of the American College of Tax Counsel. He is also the recipient of the Joanne Garvey Award for recognition of his outstanding contributions. Steve has a unique background in the fact that he actually started his career in tax as a revenue agent with the IRS before he then became a trial attorney with DOJ's tax division. He has his bachelor's degree in accounting and his law degree is from the University of San Diego. So welcome to all four of you. I'm going to kind of just do a few introductions here. So Beth, if you could go ahead and put the slides up to probably slide 5 or 6 for me. And while she's moving the slides, I'm going to note that we obviously have disclaimers. So I put the panel slides together so none of the IRS, the government employees can be charged with anything in here that can be used against them, et cetera. So the disclaimers are there in the writing. So I think I lost Beth. Can everybody, there we go. Great, thanks Beth. All the way to, if you could put it on slide 6 for me. Well, she does it, I'm gonna keep going. So what we're gonna cover in this panel is a lot of focus on tax compliance, which is kind of what you've heard all day today. You know, the expectations of the IRS for tax compliance is very much three-dimensional. There's filing, there's payment, and there's reporting. If all three of them aren't working, then tax compliance is not working. You're gonna hear our panelists talk about the tax gap. That's been pretty much on many of our, you know, national and local newspapers for months now. So it's a word that, you know, has been used and has a reason for it. We want everybody to, you know, pay their fair share. And so there are the carrots and the sticks. And of course, the sticks involve, you know, the enforcement. And that could be on the audit level, or it could be on the criminal investigation level. But you also heard, you know, Darren talk earlier, as you did the commissioner, very clearly, which is, you know, the IRS's goal is really to use its resources not only correctly, but wisely. They want to minimize the taxpayer burdens for those taxpayers who are in compliance, who make mistakes, who are trying to do their fair share and do it correctly, accurately, and timely. Well, at the same time, they want to make sure that they are using their program and their resources for voluntary compliance in a way that encourages not only deterrence, but actually enforces consistently and fairly so that it benefits all taxpayers. And to that end, Beth, if you could switch to the next slide for me. There's been, you know, some, you know, definite discussion about the need for increased tax compliance. And particularly under the release by the Treasury Department of kind of the overall focus of the American Families Plan. Go ahead and go back one. Beth, you went one slide too quick for me there. Back to 8. Okay, 8. There we go. So this is kind of the overview of, I think, a lot of what you're going to hear, particularly from Damon and Rick, with regards to the American Families Plan. Well, at least this time I can say it's not me with the technical issues, which is why I I'm not sharing the screen, but because usually that's me who does that. So, under the American Family Plan, which is one of the proposals with regards to basically giving the IRS the tools that it needs to really focus on tax compliance. And almost everything that you can see in this proposal fits hand in glove in regards to what the Office of Fraud Enforcement is all about, why it was created and what its goals are and its focuses are. You first have increasing the resources to pursue non-compliant taxpayers and better serve those who fully are compliant. You know, you're going to hear Damon talk about the fact that they're not looking to put square pegs into round holes. They're looking to find the right cases to send the right way. And if that means sending a taxpayer on their merry way because they've been educated and informed and that's where they should be, then that's what, you know, the goal is. If on the other hand, it's necessary for deterrence and compliance that either civil fraud penalties and or a criminal referral is appropriate, you know, that team is bringing in a skill set to ensure that they are picking the right cases and sending them in the right direction. Pretty smart, because at the end of the day, when that happens, you know, the resources are used correctly, and the burden on taxpayers for not ending up in a particular, you know, lane that perhaps is not appropriate, you know, saves resources for taxpayers also. And then the second prong is increased information reporting. We have heard repeatedly over and over, you know, the non-filers, the top 1%, you know, those who are wage earners, 99% are reporting, they're largely in compliance, but where the IRS does not have that insight and that window into information is where there seems to be some, you know, misreporting, non-filing, and significant compliance issues. And so that is going to be obviously an area of enforced interest for the Office of Fraud Enforcement. Antiquated technology. Look, data analytics and IT can only go so far if your computer doesn't turn on. Because at the end of the day, they need the information. It needs to run quickly. I still remember the days visiting the Ogden Service Center, you know, with, you know, you walked in, it looked like the Fortran days from my college. So we're moving on, and the commissioner's clearly focused on getting more technology and leveraging the data analytics. And last, but probably not least on the American Families Plan is regulating tax preparers. The commissioner said, and you're going to hear, I'm sure Damon, Rick, Steve, and Marty also talk about the fact that it really is a kind of a group effort. You know, while we need to, as defense lawyers and practitioners, zealously advocate for our clients and their positions. And as Frank said earlier today, Agostino, if you can't win on the substance, sometimes a technical win counts just as much. But at the end of the day, you know, we want to make sure that we are part of the solution. And so with that, Steve, if you had everything you could do to get the IRS's resources, what would be the first thing you'd be looking for? And Beth, if you could turn to that. There you go, slide 9.
Well, the first thing I would do is I'd turn on my microphone so everybody can hear me. And I think I did it on time this time. So thank you, Sandra, panel members, for having me with you. It's good to see you, Damon and Richard. Thank you for being here on behalf of the government. And it's great to be back at USD. It says I graduated in '79. Wow. That's I'm looking at myself. I don't look that old, but I guess I am. So anyway, thank you so much. So, you know, what we're looking at is really an unprecedented potential change in IRS funding, staffing, and what it will look like. But before we get into that, under the American Families Plan, which is not legislation passed yet, just to emphasize, we're coming, this is all coming on the heels of really 2 years of increasing budgets, 2 or 3 years of increasing budgets, new enforcement initiatives that have been occurring during this period of time. So we're already off to the races. I don't think we have fully seen it because of the effects of COVID, but I think we are going to start seeing coming out of it. I mean, the current budget of the IRS is about $13 billion a year. and they've done an awful lot. You'll hear from a lot of the panel members. They're out there hiring. And I would say, just to add what Sandra said, I started as an internal revenue agent. I didn't stay there because luckily there was opportunities for me to go to law school. But I will tell you, it was the chief of audit who wrote a letter of recommendation for me. Then it was called the chief of audit. That's what it was called, to get into law school. So I would just say that anybody who's looking for a great start or a great job, the service is a great place to be. In my view, it'll be even a better place. So let's looking at this slide right here. So even without the American Families Plan, I think we're going to see an unprecedented increase and change in what we're going to be looking at. But I think what we're going to see is a lot more. So the underlying concept, which now seems to have been accepted by all of Congress and the president, is increasing IRS budgets and enforcement budgets will increase revenue. Here we have 80 billion over 10 years. I think the bipartisan budget agreement is 40 billion over the 10 years. All of it tremendous increases with a focus on trained enforcement people, large corporations, high wealth. You hear that a lot, high wealth, high income. There is going to be a greater focus. But don't get me wrong, I think there's been a focus, there's always been a focus on high income, high wealth individuals. The question is, has the IRS had a sufficient amount of resources to do the coverage they need to do? So we're going to see more. And why? Because the conclusions now, the quasi-political empirical conclusions are, there's money in them hills. There's gold in them hills. Let's go out there and get those. Can you go to the next slide? So I think, let's see. I'm trying to look at here. Okay, so I think Sandra already went through some of the components on the American Families Plan. But can you go back one slide, Beth? I think you jumped over it. I want to make sure, or maybe I missed it. Okay, go back forward. Sorry, I should be better prepared. Okay, next slide. Okay, so back. You would think I'm the one doing the slides. So here we go, the American Families Plan. Our Sandra already covered this, so we're not going to go again. So she went through the overview. So let's go through the next slide. Okay, so the first thing here is, next slide, is increased third-party information reporting. This is very big, in my humble opinion, having been doing this a long time. People who get information reports normally report them correctly and put them on their return. The only controversial thing about the proposal is, if you look at the second line there, they want banks to show gross inflows and outflows of business and personal income. It's sort of like for, accountants and revenue agents out there, an old, deposits method. Let's look at all the deposits going in and out. And if someone files a tax return, not showing a whole lot, but seeing hundreds of millions of dollars going through an account, well, maybe there's something wrong with this picture. It could be loans, it could be non-taxable things, but people much smarter than I in Treasury and who've been studying this think that is a good thing. There are some people who think that's providing too much information to the government and violates our rights. I'm not sure. It is just something which can the government use that information to put everybody on an even playing field? That's what I'm concerned with. Fairness. The IRS already has so much financial information. I think Marty will chime in and think it's probably too much information, but there's a difference.
Yes, that's correct.
Okay, see, Marty, I know what you're going to say. I'm going to prompt you next time too. Okay, so but the fact of the matter is there will be increased information reporting as reflected on this next slide, which is cryptocurrency, if I prepared properly. Yes, we should all own a little bit of cryptocurrency. I've been writing it up and down because we've been doing some tax matters, and I can tell you my account has gone from $200 to $60, back up to $800. And since it's been going down, I stopped looking. I only look at my accounts when they go up because then they're depressing. But what we're going to see here is, cryptocurrency is a big concern to the government. Damon will be talking about it. It is what currency used to be, which is hard to trace. And this is hard, but it's all, the government can do it. So, but they're concerned it's being used for illicit activities, given the market capitalization of cryptocurrency and the information the IRS has on those reporting it, at least up until the most, last couple of years, there's been a big problem. So it is a big priority. Can we go to the next slide? And let me just say that there is no reason at all. It used to be the argument was, well, we don't want to do more information reporting because it takes more time. It's a burden on business. I think a lot of that argument is down the tubes with the digital world. Businesses keep all their records digitally and additional reporting. There may be some burdens, but I think it's what we want. So the next component here is there will be a big effort and a lot of money to bring the IRS into the 21st century digitally. They're already making great gains. COVID allowed them to do a lot already, but it's a big, they have so much data, and I'm told they're still using, the old computer tapes from the 60s in certain parts. So this is going to be a very important point. Next slide. So this is big. This is also controversial, and that's the regulation of paid preparers. I'm biased. I'm a lawyer and I'm regulated. Most CPAs, enrolled agents, are regulated, and they have to reach a certain standard. I think that makes, to me, certain sense, because if you don't have the regulation, the standards go down. Next slide, please. Okay, so it's really hard to read here, so I'm not going to get into the details because I actually can't read it on my screen. But what this talks about, and this is a big deal. We've been living with the tax gap, talking about it for the last 25 years. I remember in my practice, maybe 40 years. How much is it? It's the difference between what somebody says the law says the revenue should generate and what it actually generates. And I think it gives us, over the years, the compliance rate, I can't see it, it's about 83, 84%. In my mind, it's probably a big black box of who determined what it should be and what it would, but it's the best data we have. But for years, it's been hovering around 400 billion, or around there, 300 to 400 billion. And the government has taken efforts to try to tick up, close that gap. Now, I think we've really started getting a lot of frenzy in this area when I think it first started, at least from my observations, when the commissioner was testifying before Senate Finance and used the T word, the $1 trillion word. And Senator Wyden goes, wow. And then we see reports from Treasury, some reports from Harvard, and IRS reports that the tax gap is very, very big, or bigger than what was anticipated. And, a majority of it, if you can see the screen, is for underreporting. And there are some views that think a vast majority, and it would make sense, has to do with high income, high wealth individuals. That's what the recent studies show. And the government and the whole focus of both the proposals before, Congress, what I'll call the bipartisan proposal from our point of view, which provides 40 billion for funding, and the bigger, larger proposal, which provides 80 billion, is there is going to be a focus, even without any of these, on going after high wealth individuals or examining a more robust examination. We've essentially tied the hands of the service for the last, or at least one arm behind their back for the last 4 years or 5 years with continuing budget cuts, loss of employees. That has been turned around, I believe, over the next 2 years. But what they need is, they need a 10-year program so they can rebuild the IRS. So next slide, please. Okay, so this is where I get off and go on mute. Criminal versus civil tax fraud. But before I get off, I just have to make a comment. I remember when I first started practicing in the criminal area, I always had all these questions. What's the difference between civil and criminal tax fraud? And it's hard. I was not that young a lawyer. I had worked for the Department of Justice doing civil stuff, but then I joined Bruce Hochman and we were doing criminal stuff. And I was trying to figure out. And the conclusion we reached, and it was in an LA Lawyer article I think I wrote with Bruce, was the title of that article. It was More Than Bad Luck. Okay, there's something else, but there is a component of bad luck. And we'll let the other panel members talk about the niceties of the difference between the two. But just to pass on my words of wisdom, if it's not obvious, if you have your choice between criminal tax fraud and civil tax fraud, you want to go with the civil tax fraud. Okay, and that's not only advice for taxpayers. I sort of say that advice to the government all the time, and we can argue about that later. But we may have a difference of view. But that's where we come from. All right. Anyway, thank you,
Steve.
Sandra.
Thank you, Steve, for all of that. You'll get a chance to talk again later. So, Marty, I'm going to turn it over to you for the next. Yeah, I will. Marty, I'm going to turn over to you for the next few slides. Obviously you come from a background where you were, a government prosecutor and, being in the Northern District of California's tax section, as I was in the Central District, back then you did both civil and criminal cases on the government side. And obviously you've done both, on the defense side as a practitioner. And there are differences. Yes, bad luck is part of it, but there are significant differences. And I think the audience would be very interested in kind of an overview from you as to some of those differences, because those are exactly the things that Damon or Rick are going to be looking at in regards to making their decisions on how to use their resources and which cases they want to select, if it's a fraud, is it a criminal fraud? Is it a civil fraud? And there are aspects of that, including words like willfulness, that are very important to the understanding of how to make that call.
Right. Well, thank you. I've been at this about 40 years. And first, I want to say that I agree with everything that has been said here on the government side and the private practitioner side. And one of the things I want to point out is that usually I take the devil advocate's approach, which means that in a major seminar like this for a major university, you really need to dig down into both sides, maybe more than both sides of the issue or issues. So my remarks are in the point of a devil advocate's position. I think the government people, both IRS, Department of Justice, are excellent. They've done a great deal to preserve the system, but nevertheless, all of the audience out there who practices in the area needs to protect their clients under the law, under the Constitution. And my remarks are going to be to the point of how do you do this practically? I mean, it's one thing to have excellent people on the panels. It's one thing to have an excellent presentation, as I believe RJS and USD is presenting. But in the real world, what do you encounter? How do you protect your own client to the fullest extent of the law? One of the things that's interesting here is the formation of the tax fraud group, which includes the Tax Fraud Council. Carolyn Sank is one of the best tax lawyers in the country. She's a very brilliant lawyer and hard-driven. So when I say that, is it all one-sided? Can practitioners protect their client in a way that gives them their rights. We had Nina Olson talk about taxpayer bill of rights. I think that's great, but how do you do it in practice? The group that was formed about a year ago, which Damon is part of and Richard is part of, goes back to something I know that's dear to you, Sandra. You keep accusing me of TWEAL. You tell me that TWEAL is dead. TWEAL is not dead, but it's more difficult to implement TWEAL. So I think if you draw a straight line between TWEAL and what's happened today, you come up with the tax fraud group. Now, for those of you who may not understand TWEAL, TWEAL was a case about 50 years ago involving an alleged civil examination run by the organized crime section of the Department of Justice. The representative asked if it was information being gathered for a criminal purpose run by the CI. The answer was technically correct. No, it's not CI. But it came down later on that the answer was incorrect because it was Department of Justice organized crime. I consider that case the initial case of IRS consumer fraud, which is a rare opportunity for the IRS to go off the track. Later on, a well-respected IRS person, Richard Speyer, created what you call fraud technical advisor. The fraud technical advisor's mission was to collect information to determine whether or not fraud is being committed. Now, how do you combat that? One of the things that the fraud technical advisor had to do was every time he talked to the agent was to list out that there was a talk to the agent. So in any kind of criminal case that came up subsequently, you could subpoena or get in discovery the worksheets, which showed when the fraud technical advisor was involved and how they gathered the information. So the question became really, were you running a surreptitious criminal case under the guise of a civil case, just like TWEAL? Now, today, TWEAL can be invoked if there's an affirmative misrepresentation and a violation of a constitutional principle, such as Fifth Amendment right, Fourth Amendment right, but it's very difficult to prove all of this. That's why Sandra, being an excellent tax lawyer, has said, TWEAL is dead. TWEAL is not dead. It's on life support, but you can invoke it. So what happens? IRS being creative, and if you've heard them all day long, and they've been excellent presentations, that created this fraud enforcement group. Now, the problem with the fraud enforcement group is they're very bright and they have tools like data analytics available. So if you keep supplying information without knowing how it's going or where it's going or what it is, you may be unwittingly creating your own criminal case. So one of the things you have to ask in dealing with any agent, have you referred this to the fraud enforcement group, or are you involved with the fraud enforcement group? So the answer to this is you really have to know your case. You have to, and the practice of being a tax representative in a criminal case is not scientific. It's a work of art. I mean, you heard Steve Tasha talk about, here's an excellent example of the work of art, Steve Tasha. You need to have that kind of savvy. Now, how do you reconcile between civil tax fraud matters and criminal tax prosecutions? In a civil tax fraud matter, you have to have clear and convincing evidence. That means evidence that is so strong that it shows one point of view clearly and convincingly. Now, in a criminal tax prosecution, you have to prove beyond a reasonable doubt. That is, for an ordinary person to believe that there isn't any other alternative but to prove up guilt. So they're very close. Some cases could be both civil fraud or flip it. It could be a criminal tax prosecution. That's why Steve said, let's push for civil tax result. The point being that you need to know your case. You need to know what the evidence will be. Evidence consists of documents, witness testimony, and in today's age, digital information and of that sort. So, but in determining how to represent your client, you have to be aware of what the questions are. If the questions from the agents or the IRS representatives are in such a manner, when you put together, lead to a fraudulent result or a deceit or a lie. The basic tax criminal case is one of lies, one of deceit, one of misrepresentation, which is hidden assets, false invoices, double set of books and records. Back of maybe 20, 30 years ago, dentists used to have two colored type books and records. One was green, one was yellow. One got reported, one got put in the desk and put away, and maybe became the groundwork for FBARs with the money going overseas. So you need to have this. Now, the glue to all of this is willfulness. Willfulness is an intentional wrongdoing with a specific purpose of violating a known legal duty. So how do you prove that? You prove that by the badges of fraud. And the badges of fraud are, as I just explained, could be double set of books of records, could be hidden assets, could be concealment, could be a scheme, a method that keeps going. It could all be boiled down to the lies. It's a misrepresentation that can be proven by either witnesses or documents. And in your job of representing the taxpayer is to look at whether there's a justification for any element of the so-called willfulness. You might want to be able, at the outset of your representation, get a freedom of information request to see what the government has. So the overall burden is on the government to prove its case beyond a reasonable doubt, or to prove the civil fraud by clear and convincing evidence. There's no statute of limitations on civil tax fraud. So you might want to push that, saying it's better to get something than run the risk that you could lose in a criminal prosecution on the fact that you couldn't prove beyond a reasonable doubt. What's the government's theory? Government's theory is either specific items, which means they see a whole set of gross receipts going offshore or being hidden, or bank deposits method. So the bank deposits method has its an indirect method of proof, but it has its problem, because the government usually looks at all the deposits, adds them up, and sometimes misses out that some of them are not taxable, they're or been recycled from one bank account to another. Or the other indirect method, which is hardly used ever, is the net worth method. And the net worth method basically is an indirect method where you try to prove that the basic net worth is increased by an element which represents unreported taxable income and therefore there's tax evasion. Problem with that method is you have to have a certainty as to net worth, and you have to have some certainty as to the increases in the obligation. I remember trying one of those many years ago, and things can go wrong. And I asked this question, which was probably should never have asked the question, was, well, what's wrong with this net worth? I showed the witness the net worth calculations. What's wrong with this net worth? And I said to myself after I asked that question, wow, I'm going to really get hurt here, because the witness who, for some reason, the defense counsel put it, the taxpayer on the stand was going to answer, well, the net worth is too high. Instead, the witness answered, oh, the net worth is too low. It should have been much higher. So by that mistake, I actually won the case, but it's a risky proposition. Never again did I use the net worth method. And I haven't seen it done for a while. So there's methods of proof. There's a lot of ways of looking at what the government, the message that I want to bring here is that we have excellent government people with excellent systems. But if you listen to what went on here today, you'd say, well, what chance do we have in representing our client? It's not 100%. It's more difficult than it's ever been, but there is a chance, and there's a good chance if you do your homework and if you know what your case is, and you can go and look at it and move forward with it. And I'm
Thank
sure
you,
that,
Marty.
okay.
That was really, an excellent, overview of, what happens, after you're kind of, dealing with Damon or Rick in that world, and being aware of, all the nuances if the case goes criminal and kind of the burdens. And that's exactly what, Damon's job is to look at everything you just talked about to make sure that, they have put the cases together before they make a decision. And now, Damon, we're gonna turn over you to talk about the Office of Fraud Enforcement. I didn't add new Office of Fraud Enforcement because I really feel like you're not that new anymore. You're seasoned. Once you pass your first birthday, and so, but you are the centerpiece, obviously, of where the commissioner wants the IRS to be determining, which cases really deserve a second look for fraud, be it civil fraud or criminal fraud. You're the gatekeeper with your team. And so that's what the audience really needs to know is, what are you looking at? What are some of the core areas? We're going to get into just a few because we can't cover everything. And as you know, the gig economy slides, I'm really excited about, because that's like totally new and it's really exciting. And so I want to make sure we get to that, but the floor is all yours, sir.
All right. Hey, thank you. And I want to thank University of San Diego Law School. Sandra, Steve, it's great to see you again, Steve, Marty and Rick. I'm happy to be a part of this panel. As Sandra said, we are a little bit over a year old. National Fraud Council is a little bit over a year old. And so over the past year, we've learned a lot of things. We've done some good things, some very good things, right? But we have some other goals that we need to achieve during these upcoming years. I will say that what I'm going to talk to you today about, and I probably won't read from the screen, is something we call a fraud portfolio. And that's what Sandra was alluding to, some of the topics we're going to talk about. But I do want to discuss our treatment streams. So the focus of my office is basically simple: to detect and deter fraud and to strengthen compliance in all four corners of the IRS. That means TEGE, WNI, that means LBNI, that means SB. Any office in the IRS you can think of, if there's an opportunity for fraud, we're going to be there with our fraud enforcement advisors. So I say treatment streams, and I'm often asked the question, what are the treatment streams? There are two big ones. If you had two big buckets, one on your left hand is a criminal bucket, and one is a civil bucket. So in the civil context, We have civil fraud penalties. That's probably the first thing you would jump to, is that, hey, they're going to put civil fraud penalties, 75% penalty on my taxpayer. You know, what can I do? You know, is this right? Is this fair? But there's some other things that we're actually looking at in the fraud office that we've discovered over the course of the year. Does the conduct, when we see the conduct, is the conduct right for an injunction? Does it need to stop right now? Can it go the course of a civil fraud penalty? If it can't, we need to enjoin the action right now. Is this part of something bigger? Is this person a promoter? Should we refer it to the promotions office? Are there funds overseas in the country of utopia that this taxpayer says, yeah, I have the funds, I'm not going to get them, and utopia is not sending them to you? Is that right for repatriation orders? There's a case in progress now. It's been in the news. And then again, something that Marty touched on, if it's not fraud that belongs in my office, or is there something like a fraud adjacent penalty that might be appropriate for this file or for this action? So above and beyond civil fraud penalties, we have all these other treatment streams that our office is now looking at, and that, in fact, we've been putting into place over the last year. On the criminal side, what we have instituted a new strategy. It's more of like a cradle to grave strategy. We don't hand the case off to CI and then hope, you know, they get it done and send it to prosecution, send it to DOJ tax, send it to the U.S. Attorney's Office. We stay with the case through its entirety and make sure if they have questions about the case that we're there to answer the case. We have this philosophy in OFE that we don't shoot at the target, we shoot through the target. So what I mean by that, it's not just enough to send the cases to CI. We're really trying to send them in a manner and a quality that they can get to CI and get through CI over to DOJ. That's where the prosecution happens. We're not scaring anybody just by sending your case over to CI. Once it hits the U.S. Attorney's Office, where Sandra used to be, that's the part where everything becomes very real to everybody, because the U.S. Attorney's Office is going to take action with our cases. I think I've talked through a couple of slides, but you can go forward. Yep, I talked about my mission to detect and deter fraud. You can go forward from that too. Okay, so at the bottom, I hope everybody can see it. At the bottom, these are FEA groups. These are fraud enforcement advisors, and they are very special group of people. Each of them have been in the IRS for many years. Either they've been a revenue agent or a revenue officer, and they've done several cases. So they're kind of the best of the best. What we've been doing over the past year is doing a bunch of training, and Rick might go into this a little bit later about all the training that council has done for them, but we've got to get them in subject matter areas, let them become experts in areas that you probably don't think of. So there's exempt orgs would be one, pension plans would be another one, transfer pricing, syndicated conservation easements, microcaps. There's a bunch of areas that these fraud enforcement advisors are asked to look in to see if they're fraud, not just 1040 income tax. There's so many additional areas. And that box on the right, underneath the Office of Fraud Enforcement, it's called EMT. That is our Emerging Threat Mitigation Team. Basically, it focuses on areas of harm that would harm our U.S. Treasury or stop us from doing our job like we need to. Now, this EMT is set up with a group of specialists. And some of what they do, part of what they do is engage with our treaty partners. And in engaging with our treaty partners, they're coming up with areas that what happened in Norway or Australia or Denmark or Canada could happen here. This is happening to us and we're listening. Sandra, when you said the gig economy is new, we were listening to some of our treaty partners because the gig economy is worldwide. You can be here in the US and make money in Norway because it's based on a platform, an internet platform. And so just by being at your house, at your desk, or wherever you're working, you can make money around the world in several different jurisdictions. That's what's so interesting about this. And I know we're gonna, I know we're gonna get to that later. But the EMT basically, when we started back in March of 2020, I wanted them to be quick. I needed them to be nimble. I needed them to have technical tools. I needed them to be very agile. And they were all those things because COVID was here and the CARES Act had just been passed. So fast forward a year, we've put several cases over to CI. I'll talk about a couple that have just been indicted and one just was sentenced. But I think we've protected about $132 million so far. The commissioner talks about getting that money out and getting it to the right people. We did want to get it to the right people, but we could ill afford to get the money to fabricated entities or to promoters who could send these 7,200 claims in under different fax machines, same person, and then try to claim all this money. So our FEA groups are around the country. I know everybody's talking about hiring, so we hired 2. So we put in an additional 12 people over the past year. And as IRS hires more revenue agents and revenue officers, we in the fraud enforcement group need to be able to meet that demand because there's going to be more cases coming our way. We don't want them sitting on the shelf. If they need us to look at something, we need to be able to react and react quickly. I don't know if anybody's ever heard of a Plan B passports. That's something very new. It was just an article written about it yesterday. But if you think about it, it's not new to the fraud world because it happened in Malta. A lot of people were going to Malta. You can pay $1 million, you can become a citizen there. Well, Plan B passport is much like that, but it focuses on what Steve was saying on cryptocurrency. Take your cryptocurrency out of the US, bring it to another exchange and a tax haven agency. We'll get you a passport there for a small fee. Nothing is free, but for a small fee to that country. So that's something that was in. You talk about Marty. You talk about Carolyn Shank. She saw it in the paper on Sunday, and just sent it out. Send it out to everyone. So I wanted to kind of push that out. I know we're short on time, so I'm going to cut some of this down. Yesterday, an Iowa man was sentenced to more than 3 years for PPP tax credit fraud. These employer tax credits fraud. It was up in Iowa. So finally, in March of 2020, the CARES Act kind of came out, and so a little over a year later is about the right time when you're going to start seeing these convictions. And I've been seeing them lately every day, more and more and more. You can go to the next slide. So these are kind of our areas, areas of it that we're really looking at. The high wealth related schemes, high income non-filers. I'm gonna push the syndicated easement conversation to Rick, one of the people on our team here, and I'll let him talk a little bit about syndicated conservation easements.
Yeah, hey, thanks, Damon. And before I kind of get to the syndicated conservation easements, let me jump in just a little bit here and talk to everybody about the National Fraud Council here. I know, Damon, you referenced before that Carolyn Shank is the National Fraud Council here, and Marty, you had kind words for her as well. Let me give everybody just a little bit of background about our role and what we do here. As Damon mentioned, shortly after the creation of the Office of Fraud Enforcement last year, it was quickly concluded that OFE needed a dedicated council presence to provide legal advice to the Office of Fraud Enforcement. So in May of 2020, National Fraud Council was created to do just that. Carolyn Shank was appointed as the National Fraud Counsel, and she continues to serve in that role to the present date. Additional chief counsel attorneys have been added to her staff since that time. And currently, in addition to myself, there are 3 other chief counsel attorneys on the National Fraud Council team. At the moment, this includes chief counsel attorneys from both SBSE and LBNI, And for those of you who are unfamiliar with how chief counsel is organized, what we do, our organization is broken down along the same operating divisions as the IRS, SBSE, LB&I, TEGE, W&I, and chief counsel attorneys, we're responsible for providing legal advice to the IRS and litigating civil tax court cases, in tax court. With this background in mind, again, our primary responsibility as the National Fraud Counsel is to provide legal advice to the Office of Fraud Enforcement, and in particular to Damon and his management team and the FEAs out there. We help coordinate legal positions and strategies also to a cadre of chief counsel attorneys across the country who are fraud specialists as well. There's at least one member of this fraud cadre in every chief counsel office across the country. And again, this includes chief counsel attorneys in SBSE, LB&I, and even TEGE. National Fraud Counsel, we work with OFE and often head up and coordinate trainings and workshops on fraud-related issues to all IRS civil operating divisions in both exam and collection, as well as to other chief counsel attorneys. We do all sorts of outreach, such as the panel here we're on today. And, those are part of an effort to educate tax professionals and the public as a whole on fraud-related enforcement issues. Among some of the more specific things that we do here at National Fraud Counsel, we help advise and coordinate the IRS's views on, whether the evidence they've gathered in any, income tax examination or collection investigation, whether it crosses the line and constitutes evidence of fraud, and does that warrant, a possible criminal referral. In fact, National Fraud Counsel, we've helped implement Damon's new element-based approach to making criminal referrals, which come out of the field here over to the Criminal Investigation Division, and help the civil revenue agents and revenue officers, lay out their badges of fraud in a way that coincides with, the elements of actual criminal tax statutes. Similarly, we're encouraging the revenue agents and the revenue officers and the fraud enforcement advisors, if they want, they can involve their local fraud counsel cadre members and give their criminal referrals a review, before they get submitted. The idea behind here is to, provide some assistance and make sure these referrals are as polished and clear as possible. So when, a special agent over with the IRS's criminal division, gets this, they get as good a picture as possible of the badges of fraud in any given case. And, with government resources, being scant, no one has to waste their time on a referral which has no chance of acceptance. We're also looking to have a more consistent approach with these referrals. In the past, the narratives they put together as part of the referral have kind of been all over the place. Many were very detailed, but there were also some that, quite frankly, weren't as well written. I've seen some that read like War and Peace, and I've seen some that only had a sentence or two. So, I can say if I was a very busy, IRS special agent and some of these problematic referrals came across my desk, I would probably reject it regardless of the merits because it was bordering on unreadable. So, this is just one example of one of the things we do as National Fraud Counsel here. And, hopefully this gives everybody at least a general idea of what the National Fraud Counsel does and how we're working with OFE to help it, accomplish its goals and its missions. So.
Thanks, Rick. That was a great overview. Very helpful.
Yeah. And I think Damon had kind of left it there with me as well about getting into some of the specific areas of enforcement here. I know he mentioned, syndicated conservation easements. Let me just talk about that. I'll get through it real quickly here. Some of these, tax shelters and, high income kind of, schemes such as syndicated conservation easements and, micro captives. Obviously, abusive types of tax shelters, particularly ones involving, significant sums of money. They've always featured prominently on the IRS's radar. The syndicated conservation easements, they've been a listed transaction for years now. They're on the IRS's Dirty Dozen list. And, they were the subject of a scathing Senate Finance Committee report last year. Right now, the IRS is currently examining every single one of these transactions. And, you should not be surprised to see litigation in the tax court in the near future, involving civil fraud penalties being asserted in connection with some of these cases. I think it's been pretty widely reported in the media as well that late last year, there were a couple of guilty pleas entered in connection with the promotion of syndicated conservation easements, as well as a related indictment, which just came out last month. So, I mean, I think given all this, it's pretty apparent as to why OFE is involved with, helping out the IRS in connection with these types of transactions. Damon, I think you wanted to talk a little bit more about a couple of these categories, maybe the high income filers now.
Sure, thank you. But Sandra, I wanted to ask you, how are we doing on time to make sure we get to the parts that you
know what? We got 20 minutes because Ronnie gave us a little extra time, so keep going.
Okay. So non-filers, that has been on everybody's mind. It's been in the news. Commissioner has talked about it over and over. High-income non-filers is certainly an issue. When I talked about treatment streams, one civil and one criminal, and this will take us through the next 3 slides. But the criminal treatment stream, as Sandra well knows, is that we take a 7203, which is a failure to file, and it's a non-felony case, not a felony case. So what we do in the fraud enforcement office before we get ready to package that up and send it to CI is see if we can develop it into a SPEES evasion. See if those actual affirmative acts are there. Marty was going over affirmative acts earlier. On his last bullet, if somebody was looking at it, it says not to do something is not an affirmative act. It may be bad that you didn't do something, but it's not an affirmative act. So when we're looking for affirmative acts, especially under SPEES, to turn it into a 7201, that's really what we're looking for, affirmative acts. Then CI, we hand it to CI, they look for more direct evidence. The direct evidence will help them further at trial or at DOJ. So that's that would be the criminal treatment on that side. And then there's a civil treatment that we have on the other side. We kind of look at the last bullet. It's a delinquent, go back. Delinquent return refund hold program. So it says, the IRS will hold the taxpayer's income tax refund when their account has at least one unfiled tax return within the last 5-year period. Of the filed return, 5-year period of the filed return. So that's a kind of a civil remedy saying, get somebody's attention. Hey, we're not going to give you your refund until you file these returns. And that means all returns unfiled. And if there's nothing due and owed to the government, then you have your full refund. So that's an example of 2 sides of each coin.
On your last point, Damon, this is where I got to ask this question, because obviously last year we saw, taxpayer relief with checks being issued. So did you see perhaps an uptick in the information you got on that last bullet when people who hadn't filed maybe in a few years all of a sudden filed last year to get those checks?
A lot of people filed last year. It was through our EIP portal, and so they could get the relief. So we did see an uptick. It pushed their files. It pushed that year filing current, not the other years, but we did certainly see an uptick in that. You're absolutely right.
I'm going to have Beth go ahead and put it on the next slide, because this is an unusual slide, Damon, that I want to spend a little time on, because sure. As you and I both know, back when I was a prosecutor, misdemeanor was a word that you and I rarely ever said.
Never. I still say non-felony.
There you go. So when I see the actual criminal statistics that we're looking at for non-filers, has the mindset changed that perhaps misdemeanors are now okay for criminal referrals? And I know I'm getting close to a line here, because I'm not going to tell you, to say no, but it's with the sentencing guidelines being no longer mandatory, being advisory, as a practitioner, I look at this and I know I'd be interested in Steve and Marty's comments on maybe some ways to help a non-filer not go to a criminal case. But what is the mindset that's going on? Has there been a wind change, or what's going on with regards to these non-filers?
So let me give you the government answer. All crimes are on the table. always.
Bingo.
Anything available that fits the elements. I will say the stronger one is to push it toward the SPEs. And so that's kind of the landscape we find ourselves in. And I don't know, Rick, if you have any comments around that, or Marty.
And before I let Marty or Rick chime in, I will make, so SPEs, for everybody to understand, that is basically, it's a evasion case that involves someone who hasn't filed a false tax return or filed a tax return, because typically a affirmative act to have a tax evasion case means the taxpayer slash target of the investigation has to have done something affirmative. So not filing, just sitting there and having the IRS mail come in through that slot and sitting on the kitchen table for 3 years is not going to get you there. So you need something affirmative. And
Correct.
so that's where there's all kinds of, and as in SPEs, the Supreme Court said, here's a list of things, but this is not a narrow list. It can be just about anything that, and so, closing a bank account in one name and opening it up, there you go. That may be all that the IRS needs. But, for Rick, Steve, or Marty, any comments on this? Because this is definitely a flavor, I think, not of the day, but perhaps the next decade that we're going to see from the IRS.
No, thank you, Sandra, for covering that.
Yeah, Sandra, let me, the slide were these misdemeanor charges all here of the non-filers? Do we think?
No, I don't know. They're not. I would say no.
It's not.
Okay, so some were elevated to a felony. So Sandra, I agree with you. I think the misdemeanor has historically been underused by the criminal prosecution end, and I think rarely do a lot, and that's because in most misdemeanors the courts do not sentence the offender to jail. But look at Wesley Snipes as the example. He got 3 years. And I personally have had a misdemeanor. I fought with the Department of Justice for 3 years because they wanted to elevate it to a felony. No, we got to a misdemeanor. And of course that lowers the barometer, but the judge gave the individual time. So each case is a little different. I think the misdemeanor is underutilized. Felonies have consequences, but so do misdemeanors. That's all I have to say.
Yeah, and I would just chime in as well here. Don't forget, even if the case isn't, criminally prosecuted, obviously with a fraudulent failure to file, 75%, penalty associated with these cases. Obviously, that's nothing to sneeze at there as well. So, through the Office of Fraud Enforcement, we're certainly encouraging, in these cases, if in fact, criminal investigations not interested in them, to give serious consideration to the fraudulent failure to file penalty. And again, a 75% hammer is a pretty big disincentive to not file your returns fraudulent.
Well, Marty, if you could take off your mute button for a second, if somebody comes into you and they're a non-filer, what are you going to tell them to do so that they don't end up, over in CI's lap?
Look, if you have a misdemeanor type failure to file, but you also have heavy spending, putting away money on the side, other acts outside of the failure to file, you have affirmative acts that could raise it to a felony. And I think that the government will go after those type of people where the failure to file is associated with other affirmative acts. Did you ask me something else in addition to that, Sandra?
That's okay, Marty. I think it goes back to the point that the commissioner said at lunchtime, which is, if you're non-filer, it's better for you to get in the door before the IRS comes knocking on your door.
I agree with
so there you go. So David, now we're going to turn to
before we go on, can I just make one comment?
Absolutely.
I view the whole IRS non-filer initiative and what Darren's group is doing is an opportunity to avoid Damon's group. They've said repeatedly, we want you in compliance. Now, there are risks that needs to be evaluated, but it's just a golden opportunity. I mean, if you have somebody who's non-compliant and non-filer before the IRS shows up, great, get in the system before. But even after the ROs show up, you know, it used to be I used to tell my class, well, when IRS people show up, how do you tell the difference between, you know, a revenue agent, a civil agent, or a revenue officer and a special agent? And the answer always was special agents show up in twos because one needs to take notes. There was other jokes that went on with that, but that they take notes. Now, Darren said the other day on this, you know, Operation High Def, they're sending out 2 agents. I think Sandra made the point, one to take notes, I guess. So, but all that being said, this is an opportunity and to get it through. And so I would view, you know, an opportunity to get into compliance, even if the RO showed up. Somebody even suggested in the planning stage of this, and the idea was shot down by, you know, more better people in the services, that they ought to send a revenue officer with a special agent. And but that was disabused right away. So they're only sending 2 revenue officers out. But it's an opportunity.
That's when Marty starts saying tweel again.
That's not tweel. That's a criminal investigation when a special agent shows up.
Yeah, but it's in the context of a civil proceeding.
But it's not a misleading one. It's very in your face, obvious what they're doing. So,
it depends
so
on,
Damon,
depends on the
there
agent.
you go. Yeah. Damon, you want to talk about gig economy?
Yep. Let me say one thing about that non-filer. If you, there is a possibility that if you don't file, that the service will do a substitute for return. So that's a different possibility. I just wanted to put that on everybody's mind.
Yeah, and that was, Damon, that's a good point. And it was a point that I think Richard Carpenter talked about earlier about that is not your best interest either, because deductions and expenses are a matter of legislative grace, and the IRS is not in the business of giving them to you unless you ask for them. So those FFRs can be
there's an opportunity
an ouch.
there. There's an opportunity after the SFR is filed, you can amend the return by having it done competently with a competent tax preparer. So you do get the tax deductions, you do get everything. And I rather see an SFR than some other procedure that we just talked about, especially a felon.
I think my last comment on that before I turn it over will be, just make sure when you bring in that competent return, it now is absolutely spanking clean. Otherwise, Damon just got his affirmative act.
Sure
I
did.
confirm that. That's correct. You've
That's
made
right.
an excellent point.
So gig economy, we got about enough time to cover this, maybe touch another topic, Damon.
Okay, so the gig economy, that's work completed through a digital platform. That's basically what it is. Most people think of Uber drivers, but it's much, much more. If you've been watching TV lately, you'll see doctors on demand, or you can get mental health help without going anywhere. And what happened during COVID, since people weren't going anywhere, this was a way for new businesses to start and other businesses to keep making money. Instead of sitting on my couch, you sit on your couch at home. I'm your mental health provider, and I can talk to you, and you can talk to me in the privacy on a Zoom call or just a phone call. So that over the last year, there has been a boom in the gig economy. We just haven't seen it here in the US. It has been global. And you have global people in other countries that are making money here in the US. Obviously, that's important to our treaty partners. So I think, Sandra, you wanted to get into the scenario. So
yeah, we do have a hypo.
Yep,
we have our hypo, and I'm going to read it relatively quickly because I know the audience can read at the same time. So Rob has a PhD in applied math. He lost his teaching job in March of 2020 due to staff reductions. His expenses mount, his funds dried up, so he began new income opportunities. Searching on the internet, he notices an advertisement for tutoring services, particularly math, assisting students with questions, SAT prep, etc. He applies for the job, gets hired. Before long, he has a list of satisfied students and online monikers. As his list of students grows, so does his income. He realizes he can reuse the same answers to common questions, leverage copy and paste to his economic advantage. Soon he's generating about $7,000 per month from various sites with few expenses. And he's always done his own taxes. So when tax times comes, he notices that this is residual income from community college put him in a sweet spot so he can actually maximize the EIC. And so, but if he includes his tutoring income, which we all know he must and should, he would, however, not qualify for the EITC. And since he didn't get a Form 1099 or any other third-party reporting document, he's thinking in the back of his mind, will the IRS ever find out or no? So first question, we all know the answer, but go ahead, Damon. Should Rob include his tutoring income on his tax return?
Certainly from the IRS's perspective. That is income earned. It should appear on their tax return. And so that is a yes, an affirmative yes.
So what, other than not putting it on his return or deciding not to file a return at all, which of course, since he has at least some W-2 income coming in, that's going to get him in trouble. So what kind of things are you going to be looking for, Damon, to decide whether or not this puts him in jeopardy of a fraud referral?
So first, let me tell you what our initial problem is. We in the scenario we put in there that Rob uses monikers. His moniker is #1 wizard. If Rob is smart at all and he's not intending to file, he's going to create a new email address and do a portable go to Starbucks and get on their IP, and then he's going to answer these questions. That's the first thing we have to do, is find out who #1 wizard is. Now we can probably go to the platform and say, hey, you know, are you paying out these wages to these people? What's the relationship? So that's kind of our first start and our first hurdle in overcoming. Now imagine that Rob isn't even in the US. And he's in some other territory. That becomes even a bigger problem. But so you can answer mathematical questions from anywhere, and you can imagine what kind of issues that would raise for both our country and the country where that person would sit. So when we're looking at this, we're looking at does Rob have does he have the knowledge that he's supposed to file? Yeah, he probably knows. He can EITC. He's been filing. He knows he's in that sweet spot. The facts say that, he does his own return. So knowledge is there. So if it's absent, then we have to go to, I think what Marty talked about, willfulness earlier, an intentional violation of a known legal duty. That is our hurdle. That is what we are. That is what we are aiming at. So I've talked a little bit, but I'll give Rick or Steve any shots at the.
What about Cheek, Damon? What about Cheek? Cheek was an American Airlines pilot who did not report his work, and the court said if he believed in good faith, it wasn't reportable, he's okay. So wouldn't you have a Cheek defense there?
I would say no, but I'm going to toss it to Rick.
I'm going to step in here, Damon.
Okay.
Cheek had a good faith, subjective belief that he didn't have to file it. However, and that created a brand new jury instruction that every prosecutor and defense lawyer in a tax case, because of willfulness, has to deal with. The footnote for Mr. Cheek is, however, on retrial, he was convicted.
Yes, that's because he also said the whole tax system was no good.
Bingo. Yeah. But I think one thing on the gig economy, so it looks like Congress is giving you a little bit of help here, Damon, because they're now going to make the 1099K reporting. And I think it kind of goes with where we started with more third-party reporting, and it kind of came full circle here. And so, you know.
And so I hope that happens. It's always will they report? And certainly we want the information. We need the data from the third parties, but will they report? So that's going to be a big issue.
Well, in our last few minutes, Rick, Steve, Marty, Damon, last words?
Well, report all your income from all sources.
I will say our office is not Twill. We follow all the rules.
I say your office is Twill.
All right.
My mission is to prove it.
I just want to say thank you, Sandra, and to the other panel members, and a pleasure. I think we covered a lot. It was good and nice. It was fun.
Yes. Thanks. Thank you. And thank you all. And thank USD and Ronnie and his team. It was a pleasure. And we all look forward next year to doing this face to face.
All right. Thank you all.
Thanks, everybody.
So are we going to stick around for the questions, Ronnie? We can't hear you, Ronnie. You're muted.
Thank you, everyone. What an amazing panel. You guys did great. If any of you could stick around, we're going to have a couple other members from the morning panel pop on. We're going to be answering live questions and answers for the audience. If we don't get any live questions, we'll just kind of read off. If anybody would like to remain on, and then we're going to do our closing remarks with the co-director of tax program by Jordan Berry. So we'll begin the question and answers in maybe 1 or 2 minutes.
Sure.
Sounds good. I'll be able to hang around for a little bit.
And so will I. I want to promote Twill.
I don't think there's ever been a speaking engagement from Marty.
Is it true that Marty is establishing a nonprofit called the National Twill Foundation?
Yeah.
Or we should make him donate $5 to a charity every time he says that word in his speech. We could raise some money for a good cause.
Nice.
So let's start. Okay, so there's some questions and answers. Okay, I'll read out some of the questions.
Silence is not golden here.
The attendees won't be able to ask questions directly, so just have to read off of the Q&A and pose it to who you'd like to have answer.
I'll do that. Perfect. Does the IRS enforcement program utilize and work with the IRS whistleblower program?
I'm sure I can take that. The whistleblower program is very specific. They have their own treatment streams for the items that come into that program. We are not in that treatment stream program. We do have conversations with the program, but we are not interjected into that program just yet.
Does the IRS look at current plus 3 years of filings for non-filers, or does it go back further?
Rick, you want to take it, or?
I'm not sure I understand the question. Is it, can you repeat it again?
Well, that's, if I could just infer what they're saying, is the IRS on non-filers going to look past the 3-year period? I think the person who posed the question was thinking maybe the 3-year typical statute for audit versus the 6-year or the unlimited statute. How far back will the IRS go back when looking for non-filed returns?
So
yeah, I think I was going to say, I think the IRS will look back as, as far as they think they need to in any given case, depending on the circumstances. So anybody who has an unfiled return from whenever, certainly there's a possibility because the statute of limitations is still open, the IRS could open up an examination.
When doing a streamlined disclosure and the individual has 5 years of unreported income, should they amend the 2 additional years outside of the streamlined disclosure, or should they not touch those additional 2 years?
I can try that one. That's sort of a topic that we get all the time. And it really depends upon materiality, because you're talking about the special streamline program, which requires 3 years. That's it. But there are times, if it's a material number, that we might go ahead and file and pay, even though you're outside. And we've done that on certain occasions. Others, if it's not really a lot, we just follow the program.
So you'll file those returns outside of the program. You'll do the streamline, submit the 3, and then file those 2 prior years separately.
No, we've actually done it in connection with the same filing, letting them know in front, we're filing these 2 because it relates to the same, and that's been successful.
Has it? Because I've seen sometimes where they'll send back those returns when you submit it with the streamline and saying, we'll only accept the 3. And so I don't know if things have changed recently, but I've seen where you have a problem where they'll just reject those 2 years and say, we want to process 3. And
hey,
then
if I file a return and the service rejects it, that's their problem, not mine.
Okay, so you'd rather submit it with the
If
program.
I make the judgment to file the return, I'm going to file it with them to let them know.
Perfect. Good answer. Is forming a corporation in a non-state tax and a non-tax state considered an affirmative act, even if nothing was transferred to it?
It's sort of, I don't know what they mean by a non-tax state. Probably not. We'd have to know more facts. It's the question is always why. Why did somebody do something?
Yeah, exactly. If the IRS can turn it into an intent basis action, but you're going to need more than just that simple act, I think, Ronnie.
When someone interferes with tax administration, is it civil or criminal? And can the IRS staff be charged with interference of tax administration?
Unless
Yes,
Sandra
yes,
wants
yes.
to chime in, I'll let.
I was going to say yes, yes, yes.
Yeah,
Can be civil, can be criminal, and if it's done by an IRS employee, we've seen through history, you know, CI is not shy about going after, well, to the extent they have to recuse themselves, and it may be TIGTA has to get involved, but. Right, Damon?
That is certainly correct. Yes to all 3.
Yeah.
What are some examples of interfering with tax administration?
So I'll start during an audit to make false statements or misleading statements so that we can't get to the correct number. We want to get to a fair number. What should be fair, what the taxpayer should be paying. I forget the court case, but it says there's no patriotic duty for any person to pay the most tax, and we certainly agree with that. But you interfere when you mislead and take the government down a path that they shouldn't be on, and you do so intentionally.
Yeah, any kind of tactics to stall or delay an examination or a collection investigation, you know, in addition to intentionally misleading or lying or providing, you know, altered documents or something, anything like that could qualify.
No, it can be a fuzzy line. I think Justice Breyer asked the question to the Solicitor General in the Marinello case, because it was a 7212 obstruction case, because it's vague. He goes, if I pay the snow blower in my front yard, you know, to clean the front yard during the winter in cash, am I committing is that person committing obstruction or interference? And the Solicitor General did a good job of, no, we don't think that is, but you know, it can be a very vague standard. So what it says, as you really, when you're dealing with the government, you need to turn square corners, because, you know, interference with the administration is in the eye of the beholder.
Why do IRS employees force the first time abatement penalty when taxpayers have documented due cause for relief. Which I think they're saying that maybe they have reasonable cause for the abatement, but they don't want to do the first time penalty abatement. And they just want to submit normal penalty abatement. So
I don't know the answer to it. It's an easier way to dispose of the case. Practitioners like you and I want to maybe save that first time abatement relief for something else. I really don't know the answer to that, but that's what's going on.
yeah, there's some questions that need a little more detail. I'm trying to kind of read through them. I'll ask a question. I was talking to a family law attorney the other day, and is it true that family law judges will refer a case over to the IRS and actually get a whistleblower fee to report fraud paid to the county or the city that refers them over? This was news to me. And have you heard about family law judges referring tax fraud between spouses and actually recovering a fee that goes to the county or city where the judges sit to report the fraud that they see in cases before them? Would you know that answer, Damon?
No, I haven't heard of that one. That's interesting that you raise it, but I have not heard of it.
Yeah,
We've seen historically judges refer cases to the IRS, but we've never seen a whistleblower involvement. So I've never seen that before.
Yeah, typically I would get the referral from the scorned spouse. And they were not interested in necessarily, they were obviously interested in justice of their own sort.
How likely am I going to remain confidential if I file a PPP loan fraud disclosure? Basically, if they want to remain, if they put their name but don't want to be disclosed, what's the likelihood that it's going to remain disclosed?
Not sure.
Well, I think the IRS does a pretty good job of, taking anonymous types of tips and, fully investigating those. So I think if someone wants to make an anonymous tip, and I can't remember the form number off the top of my head, but they can certainly fill that out, submit it to the IRS, and the IRS will run with it, assuming there's some legs with it. If they're looking to submit some kind of whistleblower complaint, obviously, I think at some point, they're going to have to disclose their identity. But again, the whistleblower program is filled with all kinds of safeguards to protect their identity. So, it just kind of depends on, where they're going to actually submit the tip and whether or not they're doing it through the whistleblower program.
No, how I'm reading the question is, like, when you report the PPP fraud, you could do it. You could report it anonymously, or you could disclose your name, ask that it remain anonymous, and be able to provide follow-up information if they follow up. So say someone puts their name, requests to be anonymous, what's the likelihood that it would remain not disclosed to the individual? Because it actually does state, in certain circumstances, we may have to disclose your information. So there's kind of like a disclaimer when you put your name that that your name may come out. What is that likelihood is what the question is asking.
Well, I think it's going to depend, Ronnie, significantly on whether or not the case is handled civilly or criminally. Because obviously the rights of confrontation, et cetera, change dramatically if there's a criminal prosecution. It's information, depending upon whether that person is going to obviously be called as a witness, particularly if their information is so valuable to the IRS. Because they had personal knowledge of things that maybe no other source could testify. That would be an instance. But I think if you looked across most of the whistleblower statistics, it seems like a larger percentage of cases that are resolved civilly, for which unless there's a dispute with the whistleblower wanting to get a higher reward or a reward, often their names stay anonymous.
Okay. It looks like this question, I don't think they're looking for a reward, more just wanting to report the person, but be able to give more information, but worried that their name is going to be disclosed. Okay. Let's see. A lot of these are just, you know, illegible, mainly comments.
Ronnie, there's a question at the 3:20 mark from Lorena about the gig economy. And since that was a hot topic, that might be a good one to read. I can read it.
Yeah, why don't you just read it?
Okay, in relation to gig economy income, what about trade or business intent? Is Schedule C still required, or can it be reported on line 21 as other income if not intended as a trade or business?
So that I don't know the answer to.
Yeah, I think every situation could potentially be different. We need some more facts. All of those are possibilities. You know, I would recommend they seek out the advice of a tax professional, lay out all the facts, and determine the proper way to report it, because they're all possibilities.
Okay. I have been hearing comments from accountants that the IRS intends to do away with the delinquent international informational return submission procedures program, but have not been able to find an official statement on this by the IRS. Is something happening with this program?
Yeah, we're not involved with that program. Rick, I'm not sure if you know that answer.
Yeah, sorry, I don't know anything about that program either.
About the streamlined disclosure, any word on if that's going to be going away? We had heard a while back that that might be going away once the OVDP went, but that's still around. Do you see that sticking around for a while?
I'll say I haven't heard anything that it wasn't going to stick around. I'm not sure. Rick, have you been in any meetings where that's been discussed?
I have not. You know, yeah, I don't have any kind of like current or new updates on it, at least. Sorry.
Okay. We got majority of them. Is the IRS still conducting random audits under the National Research Program? This was from Tom Herman from the Wall Street Journal.
Yeah, the authority on that would have to be the
I'm
Commissioner
still
of
in the middle of
Exam.
the Zoom seminar.
Sorry, go ahead, Damon.
I was saying the authority on that would have to be the Commissioner of the Exam, DeLon Harris. I couldn't answer that for him.
Taxpayer has been asked to file tax returns from 2010 through 2020, but does not have income information for the tax years 2010 to 14. They've contacted the IRS and they said there's no way to receive this. What do you do? That's a good one. Richard, you could answer that one.
Well, you certainly want to file an accurate return. If you don't have income information, how can you file an accurate return? I mean, you can make estimates and disclose on the return that you're estimating to the best of your ability, but that would be the extent of what you can do.
Yeah, Ronnie, who's asked this person to file the returns for 10 through 20?
It says the IRS asked to file the returns.
Oh, the IRS asked them to file the returns?
Yes.
Well, as Richard said, you have to be accurate. You can only do what you have.
Yeah. And if you don't have the information, you just got to estimate it. You know, you just got to just put a number on there. As long as it's in good faith and you think that's what your income was, the IRS could come back and say, no, it was higher or lower. And there's really no fraud there. You acted in good faith and you can put a statement on the filing of the returns that you don't have your wage and income, that you estimated it and just disclose, and you should be okay from any sort of criminal exposure, because that's really what you want to avoid. You know, and if they come back and just think your income is higher based on whatever information they have, then that would be dealt with at that time.
Yeah, it would be odd for the IRS to be asking for returns all the way back to 2010. I mean, normally the manual used to provide a 6-year rule. So something's a bit amiss with the question. I'm looking at the question here. It says taxpayer has been asked, but does not have income. So I don't know if it's the IRS, who's asked them to do it. But anyway, it's, you have to be very careful because be very careful with your estimates. That's all I got to say.
Right. I would attach Form 8275R to the tax return to point out to the IRS that we're estimating, and if we come into competent information, we'll just amend the return further.
Okay, we'll do one more question, one or two. On the new voluntary disclosure form, how long is it taking to get a response to part 2 of the form after it is submitted?
A long time.
Yeah, I don't know any dates there. That's probably over in CI's house.
Right, it's at least 30 days, if not more, but it is a long time. It depends on the case, and it depends on who the manager is of the case and whether it gets shifted from Philadelphia to Austin to a field agent. So in a recent case that we had, it took more than 30 days to get it out into the field, but it eventually did get there. So you have to be patient, because a lot of the problem is that in Philadelphia, it's somewhat in disarray.
Okay. We'll do one last final question. I think, Damon, you might know this. I'm a former DOJ trial attorney, now representing tax whistleblowers. We represent clients in conservation easement cases, amongst numerous others. I'm curious about how many criminal leads are coming from whistleblower claims nowadays versus historically.
Rick, you might want to take that one. I haven't gotten any. I don't have that number.
Yeah. I mean, it's hard to say, again, like Damon mentioned earlier, the Office of Fraud Enforcement does not have a direct connection to the whistleblower's office here. So it's really hard for us to kind of comment on something like that.
All right, this was wonderful. Thank you, everyone, for the question and answer period. And now I'm going to lead over the mic to Jordan for some closing remarks, and then we'll just have a little evening, little 15-20 minute reception for anybody who would like to stick around and chat about the event. So Jordan, it's all you.
Well, great, Ronnie. Thank you so much. And thank you, everyone. This concludes the substantive portion of our program for today. Everything from here on out is just sort of fun and games and socializing. As co-director of the USD Graduate Tax Program, I am very privileged to participate in a great many excellent and informative events that we put on every year. But the USD RJS Tax Controversy Institute is one of my very favorites. So you noticed hundreds of people participated in this year's Institute. So thank you all for joining us. It was a real pleasure to have you with us today. We look forward to welcoming you all to USD's beautiful campus for next year's Institute. I'd also like to thank everyone who made this possible. To our key and longstanding sponsor, Torrey Pines Bank, we sincerely appreciate your generosity and your support. To our organizers at both USD and RJS, who put in tremendous efforts and did such a terrific job adapting our usually in-person program to this online format. Thank you to all of our panelists and our other speakers today for appearing with us. All of you are extremely busy, impressive people, and we appreciate you sharing your very valuable time with us today. We look forward to welcoming you all to USD's beautiful campus for next year's Institute as well. So on that happy note, we're going to leave the Zoom up for a little bit. People can chat, share tax comments, talk about whatever you want to talk about. And next year in San Diego, thank you so much.
Thank you, everyone. We look forward to seeing you live at our Institute next year, Friday, July 15th, 2022. We have our date set, and we look forward to seeing you all for the live event. It's such a great event to come to live. There's usually about 6 panels. We have a beautiful evening reception with food and drink. And it's really just a great networking time to meet tax professionals, create a bigger network so that we can help one another throughout the year. So I look forward to seeing you all next year. Thank you all for your attendance and have a wonderful day.
Hey, Ronnie, thank you for a great job. Everybody, Judge Copeland, nice to see you. And it's nice to get together. Hopefully we'll all be live soon, and a great event, Jordan. Thank you. I'm going to sign off now.
Thank you so much, Steve. You've always been so great to this institute, year in and year out. You constantly lead a panel, help fill panels. You have made this institute what it is today, and we are sincerely grateful for you.
All right. Well, you're very welcome. Thank you, guys. We'll take care. All right.
What grandchild number is it? You got grandchild number what?
Just uno.
Oh, it's uno. Okay, well, that's a special one. Well, congrats.
I'm going. All right. Take care.
Take care, Steve.
Bye.
Special shout out to Beth and Stacy. You guys are amazing. You guys did a fabulous job. Another seamless event. Thank you to my staff. Thank you, Hillary. Thank you, Magnolia. Thank you, Lupita. Thank you, everyone here. Marty, are you still on? No. I think it's just me and you, Jordan. I saw Judge Copeland just a minute ago.
There are another 150 participants still, 170 actually.
Yeah, they're still there. They're slowly processing it out, but they're still around. If anybody has some final questions, I don't mind sticking around and answering them for a little bit. If not, you are more than welcome to just email us, and we would be happy to answer those questions for you.
It was great, Ronnie. You did a great job of managing the event, and it was an exciting all day long event. Especially the commissioner's remarks were great. So coup to you for putting this on year after year. I look forward to the 7th event next year in person. Especially I look forward to the reception.
Yeah, that's really fun. I mean, it was a great event. I mean, Chief of CI in the morning, commissioner's remarks were very compassionate. Nina Olson really spoke very well. Judge Copeland, all the panelists. What a great day. And it was nice and quick and went by pretty quick too. So another year in the books.
Yeah.
Time flies when you're having fun.
Yeah. Can't believe next year is going to be lucky number 7. Okay, I think we should probably go. There's nobody else is on the screen, correct?
There's 114 people, but everybody's just
Okay, I think they're just, yeah, they're all started. Well, everyone, again, thank you all for attending. We look forward to seeing you next year, and have a wonderful day.
Okay.